This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo
Back.
on a Monday.
I know.
She came in. She got the waiters out.
Yes.
Came in.
Oh, my goodness.
Ford at 58th Street.
Yeah, we took the boat today.
We took the boat.
Yeah.
Central Park Boathouse. We'll be having lunch there today. Flooded up. As we say good morning, heavy rain, as Michael Barr said, serious weather across the nation. Be careful out there this morning. We're careful in the markets. I guess all in all, can I say it's like quiescent? I'm not.
Yep. I mean, we're just a little bit of red on the screen here, Tom. Not much going on there. I mean, I'm looking at some of the yields coming in. The two-year treasuries in a couple basis points, 4.29% there. I'm going to call out your Bitcoin. We're at 83,300 as we start the week.
I noticed that. It's like this is not going either way. You got the 10-year real yield back to 2.00%. That's a nice number coming up from the concerns of a 1.94, 1.95 the other day. Bloomberg's surveillance this morning. We're brought to you by BAM Mutual. BAM Mutual, they insure municipal bonds that finance essential infrastructure. They provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. Let me spell that. We do that on a Monday. BAM Bonds, B-A-M, B-O-N-D-S, bambonds.com. And so, dollar a little bit weaker. Got some great guests, great conversation today. Isabel Lee will be with us here, and some of the market movers, Lori Calvasina, on the courage to be in the market.
Nice.
Mike Green on deck here in a moment. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
You got it. And this morning we have futures in the red, and this is after about $5 trillion was wiped out from the S&P 500's value, and the index tumbled into a correction. So right now we'll start with S&P futures down 0.1%, 9 points. Dow futures down 0.2%, and we have Nasdaq futures little change, down about 18 points. The 2-year yield 4.02%, and that's little change, and the yield on the 10-year 4.29%. That's down 1 basis point. Fears of a global trade war benefiting Haven assets. Want to point out coal mixed gold, $3,008 an ounce right now. We have spot gold, $2,999 an ounce. Over to oil, $71 a barrel. WTI crude, $68 a barrel. Checking with shares of NVIDIA, they're up about 0.5%. This is ahead of its much anticipated AI conference kicking off today. Then we go to Tesla, leading the losses. That's among the Mag 7 stocks. It's down about 1% this morning. And Berkshire Hathaway boosted its holdings in Japan's top trading houses, and that's resulted in a 9.82% stake in Mitsui & Company, and also 9.67% in Mitsubishi. That is your Bloomberg Business Flash. Paul and Tom.
Thank you, Lisa. Greatly appreciate that. Got a great cross-section of conversations this morning to get you framed out into the Fed meeting on Wednesday. The Fed decides. We'll do that at 1:30 on Wednesday. Mike Green starts a strong year with Simplify Asset Management, more of a bigger, broader view with his hedge fund experience as well. I want to get to the hedge funds in a minute, but when you came in, you got in through the rain. You said, the money's moving back to Europe. What does the quote unquote money moving back to Europe do to the Dow Jones Industrial Average?
Well, it really depends on where it was invested. But one of the things that we have clearly seen is the European and rest of world investment into the United States, primarily to access the Mag 7. But honestly, increasingly through things like passive total market allocations, has been invested in the United States. Now that Europe has to bring that money home, we actually are starting to see the first signs of what we have always talked about as financial repression, which is directed return of assets. You've seen pension plans in the UK encouraged to bring more assets home. You're seeing headlines of French banks buying into strategic wastewater and treatment in their own country. This is causing the dollar to sell off as that money comes back and is converted to euros. And it's also causing U.S. assets to sell off. And I think that was an unintended byproduct.
So there's a link directly into the stock market in America.
So, Mike, I guess a lot of investors are trying to say, all right, this pullback in the market, is it a healthy pullback in an otherwise constructive market? Or is it something else, reflecting a new world where tariffs are the name of the game, which calls into question growth and inflation and so on?
Well, I was going to joke that if April showers bring May flowers, what do March showers bring? And the answer is terrifidills, right?
Right, okay.
So what we are absolutely seeing, I would say, is not healthy, although it is necessary. Right? So when we talk about Europe needing to reinvest in itself, when we talk about the rest of the world having to take on the burden from the United States for defense on a global basis, or at least on a regional basis, they need those funds to reinvest. Now, is this healthy, quote unquote? Does it mean it reflect good economic outcomes? No, we know that's bad, but it is unfortunately necessary. It's probably something we should expect to see more of going forward as compared to less.
Torsten Slok, Apollo, was out with a note over the weekend saying basically the consumer's really, really slowing down here. He quoted a bunch of statistics, including last week the airlines took down their earnings. Kohl's, a big retailer, took down its guidance. How do you feel about the consumer here and what it means for this economy?
Well, I think what we're seeing, unfortunately, is the air coming out of the Trump enthusiasm trade.
Yeah.
So we saw a huge bounce in the fourth quarter as it became apparent that Biden had withdrawn from the race, that the pivot to Kamala Harris had not worked for the Democrats. In turn, that led to a surge in consumer confidence. Unfortunately, underneath that, there was just always tremendous weakness. This bifurcated economy had been something we've seen for a long time. There's been continual deterioration in consumer credit metrics. And now, of course, we've got the reporting that's coming back on, whether it's student loans or we're starting to see the disconcerting information coming out of the FHA on subprime mortgage crisis that has been created there. All of this is basically just reversing that sentiment bounce and exposing what was already happening under the surface.
So what do we do here? Do we get defensive? Do we buy the dip? How are you talking to your clients these days?
Well, the biggest thing I would highlight, one, we mentioned the idea of the real rate, the 10-year real rate. That seems very much at odds with almost everything else we're seeing. When there's uncertainty around investment, you should look for certainty. Or when you can find that opportunity, that 2% real is a relatively attractive yield versus history. So that's one thing I'm encouraging people to make sure that they take a look at. The second component is to recognize that the markets are just like they were going into COVID. We know there's something ugly out there. We know there's problems out there. But they can't react until the flows from 401ks, et cetera, start to deteriorate, until that non-discretionary fund starts to change.
Bloomberg surveillance nationwide on your commute this morning. We welcome all of you. Good morning, 99.1 FM, Nathan Hager's Washington. Good morning to 92.9 FM in Boston. Saw some Red Sox baseball this weekend. Destined. I think they can be first place by April 15th.
Oh, nice.
Don't ask
Very
me
good.
about
Big
April
call.
16th.
Big call there.
As well. We say good morning, Bloomberg 1130 in New York. Wherever you are in the weather-torn America, be careful out there today. Michael Barr will have some good updates for you. Mike Green with us to Simplify Asset Management. What is Simplify?
Simplify is an ETF firm. We were launched in September of 2020 in response to regulatory change that facilitated the inclusion of alternative strategies in ETFs.
Hedge funds within an ETF structure.
Yeah, there was a big
How's
change
that
in
going?
regulation. It's going reasonably well. We've got several funds that are doing quite well. In particular, managed futures has been an area for us that's been really successful. Some of the revisions or more conservative ways of tapping into volatility markets have been successful for us. We've grown from about 200 million to now about 7 billion.
How does long short do here, away from Simplify? Just as a general statement, to me, it's stochastic on both sides. I'm catching a knife on both sides on a daily basis.
So actually, this is one of the areas I spend a lot of time talking about passive. I tend to play a bit of a psychologist role for short sellers because the problem is they are short securities that are convex in their structure, right? And so the Vanguards, et cetera, those passive flows, when those come in, they're larger than any one player. And as a result, people are getting shaken out. And a big chunk of the volatility that we've experienced has been a breakdown in correlations, a breakdown in rotation and leadership as that Mag 7 turned around and went down. That caused unwinds and significant stress in the long-short community that's manifested itself in that wild gyrations that we've seen.
So where are you seeing funds flows today? Maybe over the last couple of months, actually.
Well, it really depends on the underlying fund, right? So managed futures, as I mentioned, is an area that's one where we're seeing a lot of interest as people are unsure about the protection that's provided by bonds in this environment. So they're looking for alternative non-equity correlated assets. That's been an area that's attracted some funds. We're starting to see money flow into commodities again. Fears about inflation are kicking in. And obviously things like gold are attracting a ton of assets, not just domestically, but also internationally.
Is gold and commodities in general on a trend basis? You mentioned managed futures, but CTA 101 is commodities trend.
Yeah.
Is gold trending?
Well, gold is clearly trending. We are certainly seeing elements of that. Other commodities, particularly the softs, are starting to show some indication of trend as well. And so that's been an area that started to attract some capital.
So what do we do here? I mean, as it relates to kind of risk on, risk off here, I kind of feel like we're at a kind of a fork in the road a little bit here. I'm not sure people really want to jump in and say, I'm buying this dip here. How do you guys think about it?
Well, we watch it on two fronts. So one is the systematic flows. We mentioned CTAs. CTAs have increasingly
is
the trend following type strategies. So the trend has broken down in the S&P 500.
Monroe Trout. Good morning.
Perfect.
I was weaned on all these animals. One of them, by the way, folks, is a guy named Jay Henry from Boston. I think he has a baseball team.
He has a baseball team that is always in first place at the start of the season.
Always in first place. We'll get. Let's digress here. Let's do it. Paul, that was great. Let's do an audible here because Mike Green and I just take it for granted. There's stochastic trend, and I'm going to say 35 years ago, Paul Raybar, Monroe Trout, a bunch of other animals figured out this is MIT.
Yep.
Who do we talk to up at MIT?
Yes, the young lady's very smart, super smart.
And this is Andrew Lowe up at MIT. Explain CTAs and how they are better at not losing money.
Well, that's a very dangerous and loaded statement. But what I would emphasize on any trend following is it's very much like an option theory, right? If you buy a call option, as the underlying moves into your strike price, the delta picks up on that, meaning that you are gaining exposure. Trend following just does the exact same thing. It increases exposure as the trend increases, but it doesn't pay the volatility premium. That's the really key component. You effectively flip the narrative around. You play the dealer who is delta hedging as compared to the buyer of the option, who's always starting behind basically, a 3-ball 2-strike setup.
Katie Kaminsky's saying,
yes,
that was very good, Mike Green. Nailed that.
Katie is fantastic.
Well. Is there a trend in place right now?
Well, there had
in the equity markets.
In the equity markets, there had been a trend, and so part of what we've actually seen is we've removed that element of trend. The CTAs have been flowing out again. That's another source of these flows of funds, which is increasingly the feature that we'd emphasize. So, what I was highlighting earlier about what Europe's doing, it's what I would call portfolio effects or portfolio rebalancing effects. When people choose to make changes to their allocations, we see those flows. That impacts currencies, it impacts equities, it impacts bond markets.
International investors, we had heard towards year-end last year, maybe even into the first quarter a little bit, money really coming in from Europe into the U.S. equity markets because where else are you going to go? And has that changed?
Well, that has changed, right? So that's component of flow has shifted. And again, that's part of what I would emphasize. When you have discretionary flows, they create these kind of waves or disturbances, but it's the structural flows that really matter. And so historically, we've seen a growing fraction of allocated portfolios sending money from Europe. If that changes on a structural basis, this is a really big change in the American exceptionalism story.
We clearly haven't seen catharsis yet, in no way, shape, or form. But with a VIX at 22, we're sort of middling right now.
Well, we really are middling. One of the things I'd emphasize, though, is that the VIX used to be used for hedging. Prior to the advent of zero data expiry options and the shorter time component, we would have to use that 30-day point for hedging. Today, not so much. We're seeing that VIX be relevant, I would argue, is heading into this option expiry, which is just in a couple of days. Obviously, on Friday, we see option expiry. That is actually creating a condition under which a lot of funds that had created income streams where they'd sold put spreads or they'd sold calls, they're somewhat trapped in that positioning. We're going to get a reset with this option reset. I think that could provide some relief against some of these flows.
A question you're thinking about, but maybe away from your remit, with the Fed on Wednesday, is the geopolitics and what we're seeing at the White House so overtaken the dialogue, the narrative, that the Fed doesn't matter?
Well, the Fed always matters. Powell could surprise. I think we would all be somewhat surprised by anything meaningful coming from the Fed, given the uncertainty around inflation and candidly given the uncertainty around the development of the economy. Those consumer sentiment components that we indicated are deteriorating at an alarming rate, and I agree with that. It hasn't yet translated into final sales, and it hasn't translated into unemployment claims. And the Fed, although I think unemployment claims are incredibly misleading, the Fed is very focused on that metric.
Mike Green, thank you so much. Great way to start the. We could do this every Monday, rain or shine.
Yeah, exactly.
Mike Green, thank you so much. Simplify asset management. There are exchange-traded funds of note. Right now, futures at -9, Dow futures negative 101, and that VIX 30-day piece 22.10. I noted the 10-year real yield. So did Mike Green from a 2.00. Mike Green drives the 10-year real yield, I say, into 1.97. So there's some dynamics out there, and I'm not going to mince words. They're going to be headline-driven. Stay with Bloomberg through the day for our world-class headlines from Russia, from America, and, of course, on things Wall Street as well. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Trump says he will talk with Russian President Vladimir Putin tomorrow, and there could be an announcement about the effort to end Russia's war in Ukraine. Aboard Air Force One, Trump says discussions have involved dividing up land and assets.
Ukraine and Russia.
You'll ask him to
We're already talking about that. Dividing up certain assets. Yeah, and they've been working on that.
Meanwhile, according to the New York Times, the Justice Department has told European officials that the U.S. is withdrawing from a multinational group created to investigate leaders responsible for the invasion of Ukraine, including Putin. The Trump administration this morning is defending its use of the Alien Enemies Act, a 1700s-era law that allows the deportation of non-citizens without due process during wartime. Critics argue the administration defied the judge's orders, but the White House argues the judge has no jurisdiction over the president's conduct of foreign affairs and his core Article 2 powers to remove foreign alien terrorists. A dynamic storm spawned tornadoes, dust storms, and wildfires that killed more than 36 people in the South and Midwest. Hundreds of homes and businesses were destroyed, Mississippi Governor Tate Reeves.
Weather prognosticators indicated a tough weekend. Unfortunately, they were accurate.
The weather system is moving east with forecasters warning of dangerous winds from Florida to New Jersey today, while heavy rain hits New York and New England. White House officials are sharing more details about new U.S. airstrikes against Houthi targets in Yemen. White House National Security Advisor Mike Waltz acknowledges that the Biden administration also launched similar strikes, but it did not stop Houthi attacks on ships in the Red Sea.
What we inherited was a terrible situation, and this is one of what will be a sustained effort to right that wrong and to reopen global commerce.
White House National Security Advisor Mike Waltz made his comments on ABC's This Week, heard Sundays on Bloomberg. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Bloomberg Surveillance and our news update. It's brought to you by Interactive Brokers Trade. Over 10,000 U.S. stocks and ETFs, U.S. equity index options, United States Treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Okay, folks, Thursday, 12 noon. I need help. Email in, semaphore in, take me to lunch. The bracket. I do it for BRKT Go.
That's how it works.
And then for Adweek and TV Newser, I do it so every year Sarah Eisen and Scarlett Fu can tell me they beat me.
They beat you.
My first choice is Auburn or Alabama State, like a play-in of the four teams.
Right.
So I got to wait to see what the four teams are doing.
You do, or you can just kind of pick it.
You pick it.
Yeah, so you go.
My rule of thumb is really be careful about upsets. Usually if I upset, my bracket gets upset. It becomes like Michael Barr.
Yeah.
What was that one year where the 16 took out the number one in the first game?
I'll defer to Ari on that one.
I'm trying to remember.
Virginia lost.
Yes. Oh,
and Virginia's not even in the dance this year. They're looking for a coach. They're looking for a team. It's a disaster.
Can you explain?
We'll talk to Lord Calvasina about that.
The SEC, is it basically like pro basketball
They
now?
figured out the NIL and the portal situation better than anybody, and the ACC has no idea what they're doing.
I read about this. I can't remember the names. It becomes a blur. For Michael Barr and I, it's just too much. It's too much. But a kid transferred to one of the schools because they guaranteed him name, image, likeness money.
Yep. Hundreds of thousands, millions of dollars.
Do they take like Western Civ or
I don't know.
French 3?
I
or
don't know.
Is anybody in inorganic chemistry here?
No, I don't know. So that's the new world order. And coaches like Tony Bennett at UVA, Mike Krzyzewski, and the Villanova coach are like, I'm not dealing with this stuff.
That Menton girl, can we get her in here in the middle of the week? I see Texas A&M, Yale.
Yale. Oh,
that's
boy.
Actually interesting.
That could be an upset.
That could be, I don't know. We'll do some bracket talk here. I'm having fun with it, folks. Usually I go with blue teams. Michael Barr does the same thing. That's why we're both completely mediocre as well. The VIX 22.05. As Mike Green said, it's Midland. Paul mentions Bitcoin. It hasn't not pulled back. 84,000 on Bitcoin. On YouTube, subscribe to Bloomberg Podcasts from New York City. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling, and this is after Treasury Secretary Scott Bessent told NBC that recent market declines were healthy. RBC cut its S&P 500 year-end target on growth risk, and Deutsche Bank said the sell-off has further to go. We'll start with S&P futures. They're down about 0.1%, 8 points. Dow futures down 0.2%, 116 points. Nasdaq futures little change, down about 2 points. The two-year yield 4.02%. That's little changed, and the yield on the 10-year 4.29%. That's down 1 basis point. With the Bloomberg Dollar Spot Index down about 0.1%. Few companies making news. Chinese tech company Baidu. It released a new AI model that it said rivals DeepSeek's model at a lower cost. ADR is up 1%. You have shares up about 0.5% in Hong Kong. We have shares of Intel up more than 1.5%, and this is after Reuters reported its incoming CEO considering some significant changes to its chip manufacturing methods, AI strategies, and that includes staff cuts. And some insight on Apple's iPhone 17 Air model that's due out this fall. Bloomberg's Mark Gurman says it's going to take a step toward a slimmer model, port-free, relying on wireless charging. Yes, you don't need the charge. You don't need the whole charge. And finally, battery life, that's going to be in line with current iPhones. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg.
I just got all the new charging cables for the 16 because I threw out everything I had for the last 10 years. I had to get all new charging. And now you're telling me
you won't need it.
I won't need it. Okay, very good. Thank you, Apple.
Yeah,
I mean, I don't know what they're doing. I mean, there was some not negative press. Mark Gurman was out with some important stuff over the weekend, but there's always. It's like the time of year. Set your calendar every 3 months. OMG, Apple's dead. We've been hearing that since what? Nixon was president.
Exactly.
Kriti Gupta in London right now, coming up, and this is interesting, folks, because the ECB interviews. I discovered this years ago. They're not like interviewing a president of the Fed or a governor of the Fed. They're different. Kriti Gupta, you spoke to the gentleman from Spain, Jose Luis. What did you learn, and why is that different than talking to the president of the Atlanta Fed?
Well, I will say they were far less forthcoming in terms of how they were thinking. Tom, I think this might have been the toughest interview I think I've ever done, and that's really saying something because there have been some tough ones.
She had to interview me once. Yeah.
It's true, and you were a tough nut to crack as well. But this one was, it was really challenging because we're at a time where they don't even have the answers of how they're thinking about things like inflation, like tariffs, et cetera. To me, what really stood out, though, Tom, was just how big and how large the tail risks were on either end. Basically, this governor, who is, by the way, a ECB governing council member, a voter for ECB policy, is saying that we don't actually know if the second round tariff impact from the United States is going to hurt growth or if it's going to increase inflation. And on the other hand, we don't even know if the fiscal spend coming out of Germany and other parts of the world, by the way, are going to help or hinder what work the ECB and other central banks around the world have been doing. So what do you do when you can't see the future?
Do you see anywhere in the literature you read that they want a fiscal union in Europe? I have yet to glean it. They don't want to be like us.
They are trying to get that across the finish line. And this is a really divisive
come on, it's
subject.
like T-ball. We're trying to get to first base in T-ball. There's no drive for Spain to have a fiscal union with Finland, right?
There is a little bit in that they're trying to get that growth as fast as possible, especially because they're trying to loosen up a lot of the financing requirements for the defense spend. The issue is not in Western Europe. It's happening really in Germany. They're the ones that are pushing back against this. And that's why this is such a historic piece of the equation, that Germany doesn't want to be responsible for the debt issues of the rest of Europe, which, by the way, are flashing a massive red siren, a massive red flag. And they're the ones that are kind of getting in the way of this idea of joint debt or a fiscal union or what have you. And yet Germany is the one that's kind of driving all of Europe at the moment in terms of where this next fiscal spend could come from. Tom, the amount that they're talking about here in terms of spending for the next 10 years is something equivalent to the Marshall Plan post-World War II. That's how big of a deal this is.
So where are we with that, Pretty? Because that was such a watershed event a couple of weeks ago when Germany said, all right, we can take care of ourselves. We can invest in the military. We can invest in our infrastructure. And we're talking big numbers as well. Where are we with that?
So they've promised, or at least they're kind of flagging, about 500 billion euros. And that's going to include, in theory, defense spend and infrastructure spend. So things on housing, things like roads, things on bridges, et cetera, among other things. AI kind of grid build out is a part of that over the next 10 years. But I did some digging, I did some Googling, a little bit of math here. If you compare this to the Marshall Plan, which is where a lot of economists are looking, if you read the research there, the Marshall Plan back in 1948, it's a bit of a history lesson, bear with me, it gets interesting, was about $13 billion at the time. In today's numbers, that is trillions of dollars. And yet, you're looking at some of these market participants that are equating the two. One is significantly less than the other, and one is over 10 years. The Marshall Plan was over 4. So one of the big concerns right now in this market, and especially going into tomorrow when this vote is going to be happening from the German government about actually getting the spend across the finish line, is how much of the markets are kind of positioned for a big, big washout. They've been promised these big numbers. Are they going to get them? We don't know.
So, Critty, how are the folks at the ECB or just economic thought leaders in Europe, how are they thinking about the U.S. right now with all this talk of tariffs? What's the smart money saying these days?
Tom, Paul, it is tough to be an American not in America right now because everyone is mad at Washington, D.C. because not just because of the tariff story. Of course, that is taking a little bit of the fun out of associating with Americans, but it's also the volatility. It's the lack of clarity. It's the fact that you don't actually know not just what Donald Trump is going to do, but what goods, what policies, what rates, and what the start date of any of this is. So it is the volatility that's making it very tough right now for Europeans to do it. And it's why a lot of them are actually looking in terms of guidance, in terms of the smart money, not to the United States, not to the tariff policy, but actually what's coming out of China. Because at the same time as China is dealing with a lot of their own tariff threats, they're also pledging a crazy amount of money, and that is feeding into Europe as well.
Do you see in any anecdotal stuff? I mean, you're such a social animal, Critty. You're out all weekend. Do you see any slowdown yet of American tourism in London or across Europe?
No slowdown yet. And it's actually interesting because this was a conversation we were having at the Bank of Spain, where he was saying that so much of the growth in Spain, it is coming from tourism. It's coming from a couple of other factors as well. There's no slowdown yet, but there could be. And that's where a lot of the things around things like retail sales later today might show up, where things might start to get wobbly. But the problem is, Tom, so much of Europe's kind of gains that have come about is from tourism, and so much of the periphery that's been outperforming is from tourism. What happens if the Americans stop going on vacation?
If you stagger out of the National Portrait Gallery and you go down Orange Street in Charing Cross and right by Leicester Square, can you watch the NCAA, men's basketball cricket at the Hippodrome Casino? Is that where you go to watch all this stuff?
I do not, because I don't think it has the same thing. A sports bar in Europe is not the same thing as a sports bar in America.
How are they different?
So I'll start off with this. I had this really fascinating conversation. Our finance reporter, Jenny Saray, and I, we did a soccer game. We went to a soccer game, a football game, as they call it here.
Soccer game,
talking a little bit. I know, thank you. I got to translate for everyone. We went to a soccer game, and we had to reserve seats in a sports bar. It was very civilized. There was no standing room only type of vibe. It was very, very civilized. And we were wondering how some of these pubs, some of these bars actually function, because in America, a sports bar would be packed for a game. We didn't see that. Everyone's very civilized. Everyone's very normal. And then the beer comes out, and it's a different story.
And UVA, Curtis UVA is nowhere to be seen.
Yeah, I mean, it's good. I look for SMU in the bracket. I'm just starting to fill out my bracket, folks. I didn't see Critty's SMU there. Critty Gupta, thank you. Thank you so much. The View from London, we'll talk to her a number of times this week, and obviously getting really quite important there. I should note that Mr. Carney of Canada traveling to Europe, I assume he's about landed. I haven't checked, but you think that the leader of Canada would migrate to Washington or vice versa here, but
I think he's got to go initially to
Europe,
the UK and France, and then he can come to Washington.
Yeah,
I think that's how it rolls for those folks.
We will see. It is eventful, to say the least. We try to get some rest over the weekend, but I tell you, folks, as you know, it's 24/7 now with the headlines that are coming out. The thing is, Paul and I were talking about this with Mike Green off the mic, and Paul, I am absolutely thunderstruck at the second derivative, the acceleration of some of the labor series here.
Yeah.
I'm not willing to say 5% unemployment rate.
No.
But we got, as Ben Bernanke would say, we have hockey sticks in some of our labor.
And speaking of labor, Tom, again, Torsten Slok out with another note. Here's prolific. House work from home is here to stay. Household surveys, entry swipes, and location data show that work from home has become a new permanent feature of the labor market, with all indicators moving sideways since 2023.
We go quickly to our return to office correspondent, Lisa Mateo, here as well. What do you think, Lisa? I mean, there's like a divide, is how I'd put it.
Yeah, there is. But I mean, you see it everywhere, but it seems like the younger generation expects it.
Yes.
And that's exactly the difference.
Right. That's my daughter. She can't even conceive of 5.
Yeah. That's what they think. It's supposed to be.
And she started with 5 days before the pandemic.
Lisa, get out the surveillance cork so I don't lose my job. Futures in -12. We're on YouTube. Please subscribe.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. All All right, well, after a rebound on Friday, we've got futures falling this morning. S&P futures down about 0.1%, Dow futures down 0.3%. We have NASDAQ futures little change. The 2-year yield, 4.02%, little change, and the yield on the 10-year, 4.29%. That's down 1 basis point. The Bloomberg Dollar Spot Index down about 0.1%. This week's economic calendar kicks off today. We have retail sales, a read on manufacturing. That's just under an hour from now. And speaking of retail, Forever 21 actually filed for bankruptcy after years of poor performance. Continuing with our economic calendar, we have housing starts, industrial production, import price index. That's tomorrow. And this all comes before Wednesday's Fed decision about interest rates with a news conference from Chair Jay Powell on Wednesday. Bloomberg survey of economists sees the Fed holding interest rates steady through the first half of this year and then delivering a pair of rate cuts in September and then December. A few companies making news. It's UBS. It trimmed its CEO Sergio Armati's 2024 pay to about $17 million. That's trimming
That's half of what his peers make.
Is it?
Yeah. Jamie Dimon, all those guys, $35 million this year.
And that's even a trim. Okay, so the bonus pool, this is it. The bonus pool for the bank came in at $4.7 billion. That's compared with $4.5 billion for 2023. That is your Bloomberg Business Flash. Paul and Tom.
We got to get to Henrietta Trace, but like Forever 21 bankrupt, I mean, to me, it had no buzz. Am I right?
It did, like the kids were. I know all the kids were like the stores were packed, but it has slowed down a bit. There's different options for them. There's different options, but it's a cheap alternative to clothing, less expensive.
They've got their Bratz collection. It's an exclusive collection.
Oh, okay.
Out on YouTube live tweet, they love Paul's look today.
Sure.
Is this your Irish look going?
This is the Irish look. Yeah. You're lucky I didn't bring the Tam O'Shanter in here.
You got the green look. Henrietta Trace has the green look as well. For those of you on radio, she's styling the green look here to get through St. Patrick's Day. Henrietta Trace, Paul wants to get to Mr. Schumer and the fireworks and future of the Democratic Party. I'm looking at 1798, that it shall be the duty of the marshal of the district in which any alien enemy shall be apprehended for the pursuit of the happiness of the President of the United States. Why are we looking at laws from 1798 as we migrate migrants to El Salvador?
Yeah, I mean, I think President Trump is really going for shock and awe on the immigration front. We've seen a lot of reporting over the last couple months that he wants to get the deportation numbers up higher than they are. Obviously, that's very complicated when ICE is completely maxed out and Congress is not close to passing the $342 billion in additional spend on military and immigration policies. So the president has to reach into sort of a bag of tricks, and this is the one that he pulled out to really keep immigration at the front of, voter focus right now.
Quickly, will it go to court?
If I'm not mistaken, it already has gone to court. And that's certainly something that the White House is really comfortable with. This is a very litigious administration. They are happy to go to court on the Impoundment Act, on aid to USAID, on cutting federal workers. I mean, there's really no limit to things that they'd love to go to court about.
So, Henrietta, let's do a little bit of a postmortem here on Chuck Schumer and the decision to keep the government open. I've seen strong arguments on both sides. Good deal, bad deal. He did a good job. He did a terrible job. Give us the reality.
I mean, the reality is the Democratic approval rating is 27%. The reality is not good for Democrats right now. What I think is really interesting is this sort of sit back and wait approach that we're seeing from Democrats. Now, there's some justification for this as well. What we're seeing in the Democratic special elections that have happened so far throughout the country from Iowa and elsewhere is Democrats are doing 10 percentage points better than they did in November. So for Schumer to sit back and say, look, let's let the tariff policies roll out. Let's watch Trump pour ice water all over our economy. You know, a dozen eggs is $13 a carton. Let's just sit back and wait and we'll win the next midterm election cycle, which is historically the case. There's a rabble of younger and House-driven Democrats, most importantly, including former Speaker Pelosi, saying, let's get in the game. Let's fight this fight. Our base wants this. Trump didn't get a massive referendum win in the election. He got what, he needed to get through. There's a lot of voters out there that are not going to like this. Let's be their voice piece. And I think that's what Democratic voters are really miffed about right now.
And Eric from Philadelphia emails it, not Eric Belchunas, some other Eric. And he says the whole thing, it feels like a lose-lose for the Dems, Paul.
I'm not sure where we go. Yeah. So, Henrietta, are you surprised that no one within the Democratic Party has kind of stepped up to be the voice of the party. It seems like it's falling to Mr. Schumer, but he might be a name that people have kind of had enough with. I mean, are you surprised somebody hasn't stepped up?
You know, I think that the party needs to coalesce around a message, because I'm not sure that there's one, silver bullet candidate right now who's going to be able to supersede the Trump show, for lack of a better word. There is no Democratic Donald Trump. So the party at a minimum needs to unify around a message. And as I mentioned before, I mean, I think a perfect one exists with egg prices being, $12.79, even down here in Louisiana. And you're looking at Easter and you're saying, all right, I need eggs for my lawn and I can't buy a dozen eggs, so I'm going to have to go to Walmart. But wait, those are tariffed at 20%. It's not even April 2nd yet. Those are going to be tariffed at an additional 20% by then. Pick a message. It's pretty easy to do.
Henrietta, let's try to get one more in here. I mean, and for all of us, Henrietta, and for our listeners and viewers, thank you for your commitment to the show. Henrietta Trace, as Paul mentioned, Senator Schumer and the House Democrats. Do you see any tendency of a middling Clinton-Obama tone, or is this the progressive left screaming?
The actions are definitely establishment Democratic actions, but the screams are coming from the progressive wing. I would say that that's the case. Although, I'm obviously contradicting myself, because former Speaker Pelosi came out and was one of Schumer's biggest detractors going into the shutdown fight. So I think that conflict of message is really the problem for the Democratic Party right now, and they need to pick a lane.
Very good. Henrietta Trace, thank you so much. With Veda Partners, can't say the value add. We got Julie Norman coming up on Yemen as well. The value add of our team of bookers. I mean, it's incredible what they do. We have so many bookers that some of them are watching the March Madness 6 p.m. thing last night.
Okay.
I emailed and I said, what's your bar? And I do. And they said, we can't, we can't help you. We're watching the CBS show and all that. Henrietta Trace, thank you so much. Futures, -11. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, the U.S. and Iran-backed Houthi rebels in Yemen are both vowing escalation after the U.S. launched airstrikes to deter the rebels from attacking military and commercial vessels in one of the world's busiest shipping corridors. The Houthi-run health ministry says the U.S. strikes killed at least 53 people. President Donald Trump says that he would speak to Russian President Vladimir Putin tomorrow. Trump said his team was making good progress toward ending the war in Ukraine, which began when Russia invaded 3 years ago.
We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
Speaking on board Air Force One last night, President Trump also slammed a federal judge's decision that he rehire thousands of probationary federal employees that were laid off. Trump says he believes the Supreme Court should be the one to make the final call.
I think it's absolutely ridiculous. Absolutely. It's a judge that's putting himself in the position of the President of the United States, who was elected by close to 80 million votes.
President Trump is expected at the Kennedy Center today. It's for a board meeting. Organizers have arranged for the meeting to be held on stage at the venue's Opera House. Trump dissolved the Kennedy Center's board of directors and named himself chairman last month. According to the Kennedy Center, no other president has summarily overhauled the board in the venue's 54-year history. At least 39 people were killed after twisters tore through the South and Midwest. These people survived the storms in southern Mississippi.
Ran in the bathrooms, hid.
I've never been through something like that in my life.
We had never seen that type of wind or trees in this area. We've seen it on TV, of course.
High winds destroyed homes, uprooted trees, and knocked down power lines in several states. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, I'm filling out my bracket here, folks. It's like a 4-day extravaganza. Sweeney leans over, looks. It's like you're in 4th grade. Sweeney's leaning over, looking at my screen, laughing at me here. I have UCLA over Tennessee in the Midwest.
Do you? Nice call.
I mean,
All
I
right.
just the uniform is a blue, Michael.
I know.
It's
It's
that
a
blue.
UCLA blue.
It's tough to root against that.
I mean, blue over orange, right?
Oh, my.
I'm laboring over New Mexico and Marquette. That's the one I'm working on now. That's a tough one. So, yeah. That Yale,
we brought
Texas
the
A&M.
show to complete silence.
Exactly. Everybody's
I'm
thinking
going
about
with UCLA. It's a certain blue. Good morning.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Paul Sweeney and Tom Keene here. Thrilled that you're with us. Thank you so much for being with us this morning. I guess right to the newspaper. right? We're right to the newspapers this morning. Thank you. I'm rattled here. For those of you on YouTube, somebody came and said, "How do you tie a bow tie?" We're not going to waste time now.
Oh,
Lisa's time is too. But in the next block, I'll do the quick bow tie thing like I did on LinkedIn years ago. What a weekend for the newspapers. They were on fire.
Yeah, there was a lot going on. All right, so this one I want to start with because this is from Bloomberg Screen Time. Lucas Shaw put out this great article about the next CEO of Disney.
Must read.
Yeah, they say it's in full swing. So they're saying that there are two leading candidates. We go to entertainment co-chair Dana Walden. She was at this Morgan Stanley conference talking about the profitability of Disney streaming services. And they said what that shows is that her chance to show the ability to handle that Wall Street side of being a CEO. Okay. And then you have Parks chief Josh D'Amaro. He spoke at another event about his creative ideas. But what that showed is that how a Parks guy can handle TV and film. So it's showing different sides. He talked about video games, too, which is apparently a possible growth area for Disney.
The previous guy that got fired, he was a Parks guy.
He was a Parks guy. That's right. But I mean, Parks are now the biggest profit contributor to the entire company, so you have to give the Parks guy a certain
Come on. The Parks guy's going to sit in a meeting with the three representatives for The Rock,
right? Exactly.
And go back and forth.
Exactly.
I'm asking.
I don't know. I mean, again, this is the third or fourth bite at the apple for Bob Iger in succession. He's blown it every time.
This is tough talk, but I mean, in the world of executives, this is like how not to do it. Right?
How not, and it's funny because it was at a time he had it perfectly set up, and then he chose not to leave 10 years ago. Anyway, there we go.
Oh my gosh.
Sweeney's in a rare mood. Did you start on St. Patrick's Day yesterday?
Exactly, yes.
Is there Guinness in your Oh, it's not Tang in his cup this morning.
Exactly.
Is it? All right, moving on. President Trump's tariffs policies and federal government cuts, we've been talking about it, right? But the New York Times has this article saying that it's boosting stocks overseas. So they point out investors pulling money from the U.S., relocating it around the world. So they give examples, right? They say since Trump's inauguration, S&P 500 fallen 6%. Hang Seng risen more than 20%. DAX in Germany increased 10%. They go to Europe Stock 600, gaining more than 4%. So it has all this data, and it shows how over the past week, investors pulling money from funds that buy U.S. stocks for the first time this year. So kind of the money shifting to overseas. Wow. That's what they're saying that the trend is right now.
Yeah, because we heard from a lot of fund managers late last year, Europeans are flooding into the U.S. market because that's where the performance was with all the technology.
I don't know what to make of it. I think what Mike Green said, Midland, somebody wants a vector for me this morning on the stock market, they're not going to get it.
Yeah, who knows?
I don't have any value add here at all. Lisa Mateo has a value add. Next.
Thank you. And not sure if you've noticed this one, Tom, but there apparently a lot more kids are using AI to get better grades in school, and they're not telling mom and dad about it. They're just kind of touting it that they're doing good. In school.
What do you think?
So I don't know. I think if you use it as like this launch pad to kind of, if you're stuck and you have like, brain fog, you can't think of where to start an essay. Like it's a good way to spark, some good ideas. but you can't just copy and paste and like put it.
I don't. I have
done.
no idea how teachers police this.
Well,
how
that's
schools
the problem. The
police this.
teachers are saying they can't, and there's even dozens of companies that they have apps that claim that they can write essays, complete homework with software that cannot be detected. So they're like, there's these companies coming out doing this too. So I don't know. They're just saying with kids, it's hurting the way they learn.
I am so glad I'm
they
done with
can't
this.
think.
Well, it's like the
creative
vices with the kids. I mean, whether it's lecturing them on the value add back then was a Seagram's and 7.
Yep.
But can I just say that I think, you look at all the Cliff Notes.
Yes.
There's only 6 I didn't buy.
Yellow and black cover. Yeah.
Who am I to tell them? I mean, I got through aerospace engineering liberal arts on Cliff Notes.
Yeah.
Plato? How about Plato?
Oh my goodness.
But the Cliff Notes didn't write it for you.
You're right.
They're
You're right.
writing
You're
whole
right.
Lisa
essays.
Mateo, the newspapers, thank you. It is St. Patrick's Day. There will be a parade, but it is about Ireland. We start strong.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Mateo wearing Ferrari red today.
Wow.
After Ferrari, the Australian F1.
Were you up there in the middle of the night
Got
watching?
up in the middle of the night,
Okay.
1 a.m. I'm watching it. They did a great. I love the British guys. They take it so seriously.
Yeah.
It's sort of boring, to be honest. Like, you can't pass in F1 anymore.
No, you can't.
But Lisa Mateo, going all Sir Lewis Hamilton and Leclerc this morning. We say good morning to all of you. We're going green. And there will be St. Patrick's Day parade, rain or shine.
Yeah.
And there's a little bit of rain right now.
There is a little bit of rain, but it's not going to stop these people going down Fifth Avenue. They're going to have a good time.
We say good morning across the country, and of course, everybody tuned into this linkage of our political economy and our economic politics. Futures negative 16. The VIX stasis 22.19. I note the 10-year real yield is Mike Green of Simplify, 1.98%. Paul, on the data, what are you looking at?
Yeah, I mean, futures are negative here, but again, we've had a wild start to the year. Some weakening in the marketplace. We're seeing a little bit of it continued here today. Yields pull back just a little bit. The 10-year Treasury, 4.29%.
Mexican peso advances from a 20 level through to 19.90. We say good morning to everybody in Mexico listening. We paid I'm the one. Canada. Okay, it's close, folks. What can I say? And my Spanish is worse than my English. I'm sorry. We say good morning to Mexico. Very good. You nailed that. Bloomberg Surveillance this morning, brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure. They provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com. We thank BAM Mutual for their support of our effort here as we can. From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
And we've got futures in the red, and this is after fears about the economic impact of tariffs that really triggered a correction in the S&P 500 last week. We'll start with S&P futures, down 0.3%, 17 points. Dow futures down 0.4%, 190 points. NASDAQ futures down 0.1% or 30 points. The 2-year yield, 4.02%. That's little change, and the yield on the 10-year, 4.29%. That's down 2 basis points. Fears of a global trade war benefiting haven assets. We turn to gold right now. COMEX gold, $3,004 an ounce. We go to spot gold, $2,997 an ounce. As far as oil, we have Brent crude, $71 a barrel. WTI crude, $68 a barrel. Tesla leading the losses among Mag 7 stocks this morning. It's down about 1%. Then we move to shares of NVIDIA, up 1%. That's ahead of its much anticipated AI conference that kicks off this week. Sticking with AI, more people choosing the paid for versions of AI to help with everything from planning vacations to generating content and social media. How much are they spending? Okay, between $10 to $200 a month on AI tools like ChatGPT. So they're spending for it. That's your Bloomberg Business Flash.
I'm using it more.
Are you?
I'm like fighting it because I'm a fool.
Okay, and
but
do you like it?
A Google search.
Yep.
It's a value add.
Gemini?
Is it Genesis?
Gemini? Or
Gemini.
Like
Yes.
I'm using it more. It's
right.
very seductive.
Whether you want to or not, you're using it more.
I'll type in whatever I'm typing in, and it gives me more than a search engine.
Yes.
It does.
And I hate to say it, but I'd probably pay for it. Good morning, Google. We love YouTube. Get a count. Okay, out on YouTube Live, a gentleman bought 2 bow ties. Here you go. The trick to a bow tie, for those of you on radio, Lisa will explain.
Okay.
This side has to be longer than this side.
That's the left
Usually
side.
It's a little longer.
Okay.
But I'm doing this with my collar down. And you tie it just like an ice skate. You're at the face-off. Your skate lace is undone. The ref is looking at you. He wants to drop the puck.
Well, that's not very complicated.
But you tie it, and what I just did seems easy, but it's not.
Okay.
So it's not like a shoelace you're tying.
You
like
tie it just like a shoelace.
Like how you said a hockey stick.
It's easier than you think.
Really?
Yeah, but
there you go.
But there it is.
Boom.
And this is a Brooks Brothers time we're in today. Usually it's Hermes, but they're both. It depends on the fabric.
Yep.
And this is really good fabric.
Okay.
Ties well as
But
well.
green for St. Patrick's Day.
St. Patrick's Day.
Unlike Dr. Coronado ending with an O or Lisa Mateo ending with an O, not wearing green this morning. We noticed that. Julia Coronado joins, founder, president, MacroPolicy Perspectives. She's got a green plant behind her. Thank you, Julia, for that. And this is important, folks. This is the interview of the day because nobody's paying attention to the Fed. So we're going to dive into this with Dr. Coronado. We're going to slow down and spend some time on this. Julia, how does a Fed synthesize the data in this moment? Do they just step back and say, we give up?
Well, I don't think they're going to give up, Tom. The Fed never gives up. You know that. I think what they do, though, is they do step back and they say, look, there are competing influences. There's a lot going on the policy front. We just don't know. Powell, in his last speech, stressed the net impact of all of these policies on the economy. They go different directions. And so the Fed is really going to have to wait and see because, look, the inflation data haven't made the progress the Fed had wanted. We're still hovering above their target. The labor market, latest data, still resilient, so they can afford to wait and see.
The money question right now, and I'm going to go back to Frank Knight at Chicago and Knight and uncertainty, and the idea of ambiguity. If they cut interest rates, does that boost growth? Does it boost nominal GDP activity? Or are we beyond that now where we really don't know the outcome of a rate cut?
It's a great point, Tom. A rate cut isn't going to be the antidote to all the worries that investors and businesses have right now. There is a tremendous number of sources of uncertainty right now. Trade policy is one of them. Immigration is another. Cuts in government contracts is another. Reshaping global alliances is another. So I think there's just many sources of uncertainty. They collide with each other. It's very difficult for businesses to make longer term plans. Of course, we all get up in the morning and go to work and run our businesses and do our jobs. But are you going to make the bigger decisions about hiring, about CapEx, about moving forward with strategic initiatives in this environment? It's difficult. It's challenging. So no, a rate cut isn't the antidote to the uncertainty that we face.
Julia, the uncertainty that you mentioned from whether it's tariff talk or just Doge and things like that, it's certainly calling into question growth forecasts, inflation forecasts, and we saw the University of Michigan data last week really capture that uncertainty in the marketplace.
Oh yes.
The Trump administration says, okay, that's some near-term pain for some long-term gain. Do you see the long-term gain, or how do you kind of think about that story?
It's difficult right now to see what the strategy is. What is we all knew that there was going to be a trade war. We believed that the focus was on unfair trading practices in China, and that China would be the focal point, and then there would be other secondary initiatives. And now the focal point is our main trading partners of Canada and Mexico. And what's the end game? What's the strategy? I think that's what's harder to see. It's a little cheeky of Secretary Bessent to suggest that this is just near-term pain for long-term gain when markets are inherently supposed to be forward-looking, right? We're supposed to see through the trade-offs, and if we can see, okay, we're going to get this now, but we can see where we're going. Then markets maybe wouldn't be so volatile or struggling to see the through line of all of this. I don't think it's clear, and it's chaotic, and so I think that's what's lacking.
Julia Coronado with us. We continue with Dr. Coronado here on this St. Patrick's Day. Across the nation on your commute, we say good morning, 99.1 FM in a very active Washington. On YouTube, subscribe to Bloomberg Podcast. We are humbled. Paul and I are absolutely humbled at how it's growing each and every day. Paul, futures deteriorate slightly, Dow -200, SPX -18, the VIX 22.25.
Absolutely, Tom. So, Julia, have you taken down, or do you expect to take down your GDP outlook for maybe this year or next year?
We started the year below consensus because our emphasis was that some of the policies that are going to be negative for growth are going to happen before the policies that are positive for growth. And that seems to be playing out. So we are at 1.4% for GDP this year. And that is something that we had kind of starting where we are around 2% and then slowing as the year unfolds, given specifically reduced immigration and trade wars. I think that, we just did a survey of market participants, which we do every quarter ahead of the Fed meetings. And investors are also taking down their median growth forecast, went from 2.2% for this year down to 1.5% for this year. And that's a very striking result. And we asked a lot of questions about the individual policies and the net effect of all of the policies. And on balance, they are expected to be growth negative for this year.
Have you marked down nominal GDP? Or is it such a stagflation that inflation stays up and supports the animal spirit?
We do have a little bit of the stagflation flavor, at least for this year. We kind of see this as macroeconomists unfolding with a shock to prices from tariffs. And that in and of itself is demand destroying, and that may lead to lower inflation in 2026. But what you get in the near term is a burst of inflation that keeps the Fed from stepping in as early or as aggressively as they typically would.
I'm absolutely fascinated in this milieu of the effect of the Fed, and have they become impotent?
We said that before the pandemic, and then the Fed stepped in and proved us wrong. So I would never say that monetary policy is impotent. What I would say is that they are likely to face, at least in the near term, conflicting pressures on their dual mandates. We may see the labor market deteriorate, but we may see inflation drift higher. That combination is just going to keep them on the sidelines for longer unless and until either the Bessent rosy view of a better future plays out and they don't have to do anything, or the recession, fairies start to sprinkle their dust on the U.S. economy, and and the Fed ends up cutting rates more aggressively than is currently priced.
I mean, Paul, get a couple more questions in here, but the overwhelming thing to me is the labor data.
Yeah.
That's deteriorated. Yeah. And what, the last 4 days?
I know.
I mean, I'm not making this up.
No.
They're hockey stick moves.
And we're going to see, Julia, we're going to see some retail sales data today. And I think people are a little bit nervous about that, given that you missed sentiment data from last week here. How do you think the consumer's doing right here?
Yeah, consumers, it's hard to count them out. We saw some softness in January. Some of that looked to be, when I look at the consumer data, I see some evidence that there was a pull forward of durable goods spending in Q4 ahead of the tariff. So we saw autos and electronic sales really surge in Q4. So we're kind of due for a little bit of a pothole just because that was a pull forward. But we are going to look at sort of the core or the control retail sales categories, the really discretionary areas like, restaurant spending or clothing spending. Are consumers being cautious in those areas? That's usually an early indicator that they're pulling back more broadly.
Julia, we got a central banker running Canada. Your comment on Mark Carney's ability to lead Canada forward.
Yeah, he's a intriguing choice, not a politician, a central banker, multiple times. Certainly, he has the chops. He knows policy. He's been a global leader, so he has all the relationships that are kind of needed at this moment. Canada has to restructure its trading relationships, its strategic relationships, given what the U.S. is doing. And Mark Carney's, I can't think of a better person to help lead that effort, which is so critical right now. So he's an unusual candidate, but somebody that, he definitely has the policy depth.
Julia, your plants are very green. Dr. Coronado with MacroPolicy Perspectives. Thank you so much. Sweeney to the rescue. Why are retail sales on a Monday? That's un-American.
I know. I'm not sure. We'll see what happens here at 8:30. Yeah, exactly.
Like 15 minutes, folks. Mind freeze. I was worried about my bracket instead of retail sales.
Eco go.
I have jumped further. I haven't got to Final Four. I don't know if you know this, folks. I got like an 800-page agreement. It's like codified. In page 472 says I have to put Purdue. To Final Four. It's in
engineering students.
The bracket.
Yep, absolutely.
So I lose every year on Purdue. Are they any good this year?
Not as good as they've been in the past couple of years, I don't think, but they're always good. Coming out of the Big Ten.
We're working at it as well. Julia Coronado, thank you so much. That was very informative. Futures do deteriorate, -10, right now down to -19. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Kremlin has confirmed Russian President Vladimir Putin will speak with President Donald Trump tomorrow as the U.S. pushes for a ceasefire with Ukraine. Bloomberg's Laura Davison has the latest from Washington.
This is a clear sign that the talks that have been going on for weeks between U.S. officials and Russian officials are advancing. This has been a concern somewhat to Europe. They have been less involved in the process. Trump last night on Air Force One told reporters that the things that they're negotiating are land as well as power plants. One of the things that both Ukrainian and European officials have said they're worried is that Trump would preemptively give up too much and be too favorable to Russia in these negotiations and not preserve enough, both in terms of security for Ukraine as well as some of their land.
Bloomberg's Laura Davison in the nation's capital. The U.S. has launched a new campaign of intense airstrikes targeting Yemen's Houthi rebels. This weekend's strikes killed at least 53 people. The Houthi rebels had targeted over 100 merchant vessels with missiles and drones, sinking 2 vessels and killing 4 sailors from November of 2023 until January of this year. Severe weather caused death and destruction across the South and Midwest over the weekend. At least 39 people were killed. High winds uprooted trees and knocked down power lines in Dallas, Georgia. Some homes were also destroyed by the debris. This woman survived the storm.
We were missed the last time, so I didn't think to anticipate that there would be anything happening this time. But when that storm tore through, it was pretty loud. And of course, when I heard the hit, it started raining in my bed.
About a quarter of Mississippi's counties were hit by a track of tornadoes over the weekend. Governor Tate Reeves.
We are now up to 23 counties across Mississippi that are reporting damage. and damage assessments are ongoing.
The weakening but still volatile weather system is moving east, with forecasters warning of dangerous winds from Florida to New Jersey today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, let's do this right now because Lisa's giving me grief that I'm using AI to get through the show. Okay, it's real simple. In Chapter 4, Leopold Bloom is at his and Molly's home at 7 Eccles Street in the northwest quadrant of Dublin.
Yep.
We're doing this because it's St. Patrick's Day. He's preparing breakfast for himself and his wife and his cat before departing for Patty Digname's funeral.
Wow.
James Joyce, Ulysses.
Yep.
Do you want to read 800 pages James Joyce or 128 pages of the Cliff Notes? You make the call.
Exactly. The yellow and black, as Lisa mentioned. I mean,
But what
God
does AI
says.
tell you about it then?
Well,
Then
does
you have to,
AI
like,
rate the
compare.
whole essay that
AI
you're supposed
probably
to do?
would be better.
You can sit there and say, ChatGPT, and say, write me a 300-word essay about this.
And then you go back on your phone and talk
in
to
seconds.
Okay, so 783 pages down to the Cliff Notes 128. And Lisa, for your low-life daughter at home living on AI, she pops off a James Joyce essay
like this,
like that,
Wow.
and it's like how long? 7 pages?
Yeah.
Double
And how did the
spaced type?
teachers? And how did the teachers?
There used to be like software that would tell them, but
Okay,
now there's
I
other
don't
companies
know.
coming out that can go around that. It's crazy.
I had to read
I feel bad for teachers now.
sophomore year. I'm doing statics and dynamics, systems analysis, some other unspeakable engineering stuff, and they throw James Joyce at me and say, read it. That didn't happen. It's just good morning on St. Patrick's Day. Anybody on YouTube, please live chat YouTube. Email in only if you read Ulysses cover to cover.
James Joyce.
I mean, there's probably 3 people out in North America that did that. We say good morning here.
Good morning.
St. Patrick's Day. What's the memory you have, Paul?
Corned beef and hash. My father and it just doesn't work. But we had it every St. Patrick's Day growing up.
I loved it.
I know.
You don't like
I know.
it? I loved it.
No. I mean, and he never offered the Guinness, so I mean, so it was kind of a rough day there growing up.
Got to do the shepherd's pie. Have to do
Yep,
it.
yeah, that's
I'm making it
that's
tonight.
not bad.
I am.
Oh, are you? Okay.
I'm making
we'll stop
shepherd's
by
pie.
the Mateo household for a little shepherd's pie.
Okay.
Puerto Rican shepherd's pie.
Yeah, exactly. Little flair. Exactly.
A little spice.
We'll have to see. We say good morning to all of you. And on a rain day, I guess the St. Patrick's Day parade here in New York will attend. We'll have to see on that. Futures at -18. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. We've got futures falling this morning. This is after Treasury Secretary Scott Bessent told NBC he's not worried by the slump in U.S. stocks. We have S&P futures down 0.2%, 16 points. Dow futures down 0.4%, 185 points. Nasdaq futures down 0.1% or 26 points. The 2-year yield, 4.01%. That's little change. The yield on the 10-year, 4.28%, and that's down 3 basis points. Taking a global look, the OECD predicted global expansion will slow to 3.1% this year and 3% in 2026 due to trade barriers and uncertainty. The Bloomberg Dollar Spot Index down 0.1%. We have Bitcoin just above 83,000. Few companies making news. Politico reporting that Oracle speeding up talks with the White House on a deal to run TikTok's U.S. business. And finally, Amazon trying to generate new excitement around its Alexa lineup. It's adding a premium tier. That's to the next generation of AI Alexa gadgets. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
It's really interesting. I'm surprised we haven't seen Premium Prime or, all the services we do.
Don't jinx it. That's another one that's going to have to pay for
another $8 a month out of you by making you premium.
Yep.
All that. We'll have to see. We've got economic indicators here. Sweeney to the rescue. Retail sales here in 4 minutes. Jay Hatfield joins right now with Infrastructure Capital Management as well. What have you done to your portfolios in the last 5 fun-filled days? you just come to lunch and...
No, not quite. Thanks for having me, Tom and Paul. So we have a different view of this downturn. We look at it as a normal seasonal dip. I don't know why people don't figure this out, because I've said it like 100 times, but when you want to be long stocks when earnings are coming out, good news comes from companies, bad news comes from everything else. So we had actually been neutral on the market since the beginning of the month. We take our funds, our ETFs down about 10% in cash. Our hedge fund, we take the 30, 40, 50% cash and have hedges. Yeah.
I'm paying you 2 and 20 for cash?
Well, because you want to be long the market when it's going up and not so long when it's going down. And really good hedge fund managers who want to have high returns and not just deliver like 3% a year will do that.
Okay. So what do you make of the last several weeks here? I mean, the narrative obviously is the talk out of Washington, whether it's tariffs or immigration or whatever, it's putting a negative impact on growth expectations, a negative impact on inflation expectations. You see it in the UMISH data. You see it in the company's guidance, whether it's the airlines or coals. Something's happening out there.
Well, we think actually that we shouldn't just blame the tariffs and DOGE, that it's really the Fed. 90% of the weakness is coming from the Fed. We've had 3/4 of the old economy declining, so that's construction and housing. So we've been calling for a slowdown. In fact, I guess it was roughly a month ago when we were calling for a slowdown before all this bad data came out. So we have a differentiated view that, yes, at the margin, tariffs are making growth worse, but it's not the key driver, and the Fed needs to cut rates.
I'm going to get this in, and we'll cover it after the retail sales report, unless the world blows up. We'll have to see on that. Lisa Mateo had that in a moment. But Jay Hatfield, I'm with you on stagflation. Now, maybe a lag, you may get inflation, but I'm sorry, if I've got dampened growth in these political challenges, my disinflation vector is huge. Do I get disinflation or outright deflation?
Well, we could have outright deflation. The Fed's shrinking the money supply by 5% a year just to keep rates artificially high. That's, by the way, the best way to gauge whether they're being tight or not, is what do they have to do to keep the Fed funds rate at where it is, which is not market. And our measure of real-time inflation is only 1.8% on the CPI. So it's actually below the Fed's target. So we have a huge risk of deflation. And the last point, which is critical, is you need to analyze tariffs as a sales tax. So, and distinguish between economic and political inflation. So if you do it properly, you would ignore, from an economic perspective, the increase in prices from tariffs.
But, at the end of the day, it's tough to do when you're sitting there in a supermarket, I guess.
Well, that's politically, I think it's a bit of a disaster.
Yeah.
But even Neil Kashkari has recognized that. So, for instance, if you had 100% sales tax, it's not inflationary, that's massively deflationary. So the Fed has misanalyzed this as usual.
Well, like most people have. But I like the idea of it's an overlay sales tax, or to go foreign, it's a VAT tax as well. We're going to continue with Jay Hatfield. This is fascinating. with infrastructure capital management. And you look at all that's going here now. Futures, I don't want to oversell it, deteriorate a little bit. Negative 17, the VIX 22.23, the Sweeney yield for a lofty 4.02%. It's time for retail sales.
This is breaking news from Bloomberg.
And it looks like it's a bit lighter than expected. So this is for February retail sales month over month. Expectation was for 0.6%, came in at 0.2%. We moved to, when you take autos out of the picture, the expectation was for 0.3%, came in right on target at 0.3% as well. As far as the market's moving right now, well, NASDAQ futures still down about 0.1%, Dow futures down about 0.4%, S&P futures down about 0.2%. Checking with the yield space, 2-year yield 4.04%, up 2 basis points, and the yield on the 10-year 4.31%, and that is little change. Tom, comes after, though, a lot of companies. You heard Forever 21 going for bankruptcy, so a lot in the movement of retails.
Just 3 seconds ago, we see the revisions as well. The revisions were for a more dampened retail sales, even on the control group. The previous number on the control group was negative 0.8, and they revised that to negative 1.0. So I'm going to call it it's a nominal statistic, a more dampened number, which means Jay Hatfield looks brilliant. We'll get to him in a moment. Our economic indicators, whether they're confusing like I just did or the clarity of Lisa Mateo, brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. I mean, it's a move. That's all there is to it. Futures negative 13. Maybe the markets don't move all that much, but I got a 2-year yield, higher yield, 4.03%. But I'm sorry, dampened nominal becomes disinflation at some point.
It does. I mean, so Jay, when you see kind of retail sales here, again, the headline number is 0.2%, consensus was 0.6%, but then the control group came in at 1% versus a consensus of 0.4%, so it's kind of mixed bag out there.
Well, the control group is the most important because it feeds into GDP calculations. Okay. So we should get all the GDP now trackers should go up. So that's really critical. So you should really take the first three categories off the terminal and just show control group. It'd be simpler that way. But I think the other thing to keep in mind, the first quarter is normally weak. So we think the economy is weakening, but we're similar to your last guest. We're at 1 to 2% growth. So even if this quarter prints 0 or negative, we think, as usual, investors would overreact and are overreacting right now. We don't see it a recession, just a growth slowdown.
What do you think we should do with our Federal Reserve Chairman, Jay Powell?
Well, we have a differentiated view in that we think it's absolutely clear that the president can fire the Fed chair. Can. Not for what he's doing now, but for incompetence in creating the great inflation of 21. So it's very clear from the case law.
How did he create the great inflation of 21?
By increasing the money supply 70% and being late to the party.
Didn't that create U.S. exceptionalism versus the rest of the world with the cost of some inflation?
No, I don't think so, but I think
pushing back on you big time.
Well, it stabilized. Initially, it stabilized the economy, but then they came up the transitory view, and then they failed to raise rates in early 21, which is when they should. If they followed our indicators, they would have raised it in early 21. So just way too late.
So stepping back here, I mean, how do you think about this U.S. economy here? Because it feels to me in this little radio studio that things have changed in the last 4 or 5 weeks. And it went from being, wow, this is going to be great, lower taxes, less regulation, animal spirits, to what are we doing here?
Well, we think everyone massively underestimates the power of monetary policy.
Okay.
So you just can't keep rates artificially high forever. And we saw the slowing for the last 3 quarters. So we've been negative about the economy for roughly that period. And so now you're just seeing it finally reflected in numbers. Now, having said that, tech spending is extremely strong. You should always look at investment. That's what creates recessions. So that's why we're not saying recession. We're saying 1 to 2% growth. And we're hopeful, but not confident, that the Fed will figure it out. Like, there really are no stories that aren't about a recession. So how could the Fed miss all this? It's hard to believe.
So what do you think our Federal Reserve should do? I think if you look at the WIRP function on the Bloomberg terminal, it looks like maybe 2 rate cuts this year, maybe a little bit more. I don't know. How do you think
they can cut once a quarter, and that would be adequate, as long as their future guidance is dovish. So what happened is they misreacted to the Trump policies, and then everybody became super hawkish, both at the Fed and the market. Now we're coming back to normal. We think they'll cut in the early May meeting. They're not going to cut this month, obviously, and that'll be sufficient to get the housing market to stabilize. And I would also point out that the key financial indicator is the 10-year. And so the 10-year, the market's cut rates for the Fed by 50 basis points already. That's why I mentioned guidance. So if the 10-year goes below 4, we think we'll stay out of recession and be fine.
All right, Jay, thanks so much. We appreciate it. As always, Jay Hatfield coming in to give us some thoughts here. CEO, founder, and portfolio manager at Infrastructure Capital Management. Let's get some more reporting on this retail sales data. Reed Picker joins us, Bloomberg News. She covers the economy for Bloomberg News. Reed, what do you make of this retail sales data that we got just this morning?
So that top line number was definitely a miss, coming in at 0.2%. And then we also saw the prior month's data, which was already pretty bad, got revised even lower. Remember, January was a month that had some severe weather, and we saw a pretty substantial pullback in terms of spending on motor vehicles. But we actually saw that weakness come into this month, this data as well. So we still saw some softness in auto sales, and we saw kind of a lack of discretionary spending pretty much across the board. You did see some spending in terms of essentials like grocery stores, but really the only true silver lining of this report was what we call the so-called control group. So the control group is what feeds into GDP, and that came in quite strong actually at an increase of 1% when economists were expecting 0.4%. And that was pretty much entirely driven by a category we call non-store retailers. But that's really like e-commerce, spending online.
Come on, Reed, is that Amazon? I mean, Reed, cut to the chase here. Lisa Mateo wants to know. The basic idea is retail sales are soggy because Lisa stopped with 5 orders at Amazon this weekend?
Well, I certainly placed one over the weekend myself, so that very much could be coming into play here. We also heard going into this report that economists were talking about seasonal adjustment and how that could play into this report. So we'll need to see kind of as the dust settles a little bit how much even that increase in non-store retailers is driven by the seasonal adjustment factors rather than actual strength, which we should know in kind of the coming minutes. But overall, yes, a softer picture than what folks were expecting, but a plus for GDP, which had been looking pretty paltry.
Reed, thank you so much. Reed Pickert with us in Washington here in retail sales. Paul, what's your take on this? I mean, I'm looking at retail sales, and there are nominal statistics, so inflation's in there. But to me, they're sort of soggy.
Yeah, a little bit of a mixture. You've got the retail sales, the headline, weaker than expected, but the control group is better. That's why we have the professionals come in to help us with this stuff. Liz McCormick, thank goodness, is in our studio here. Liz, the headline comes in to 0.2% weaker than the estimate of 0.6%. Tell me about the control group.
Yeah, the controls group was uber strong, right? If I'm allowed to use that
modifier.
Do I
focus on that?
Well, you know, it's funny. Me and Mike McKenzie sit by each other. We're looking at this, and it's a mixed bag. I think that was enough to get the market a little bit ginned up as far as higher bond yields. I mean, we're not up a lot, but I think people thought maybe this report would be soft, which Reed laid out a lot of softness in it. So the control group being so strong, I think kind of got the market going a little bit. Remember, we have Powell and FOMC on Wednesday. So there's a lot of kind of speculation. Remember, the dot plot was supposed to show 2 cuts this year. Most people think it's going to stay that, even though the market is way ahead of it, priced it for about 3, right? So, you know, traders got to hedge their bet, right? We don't know if Powell does. Remember the last time he talked, he's like, the economy is fine. There's no problem. He didn't seem like he's going to jump in with the Powell put. So I think the market is hesitant to go over their skis, you know, go too far, more bullish. Remember, yields have fallen a lot, as you guys have talked about a lot this year already. So I just think the control group was strong. We got Wednesday FOMC looming. It just wasn't enough to kind of really send yields lower.
Markets advanced here. We were negative 20-ish on futures. We're now flat. We're going to get green on the screen in a moment. Green and red. The VIX critically comes in under 22. 21.89 is well. The advantage of having Liz McCormick with us, besides umpteen years doing this, is she knows the math. Is the physics working right now? I mean, if I'm a bond guy, I'm sorry, the mathematics is not germane here given our geopolitics. Is that right?
Yeah, but I mean, I think to me, the bigger picture is the math. And as you guys know, Scott Bessent continues to say detox needed. We're not worried about the markets now. The kind of the theme from the administration is a bit of pain until all their good stuff comes through. So I think the math of where yields have come down, that's what bond traders do. Have to price in recession risk growing, right,
but
Tom?
To Liz McCormick, if I see Yale Budget Lab or CBO give us the macro future that's ugly on the debt and the deficit, which is playing in here right now? The day-to-day Trump battle, or is it more macroeconomics playing into yield dynamics?
Okay, you're getting ahead of a story we're working on.
Well, that's excuse me. Let's get that right now. Breaking news of Liz McCormick.
Scoop myself. Okay. So, me and a couple of my colleagues have been talking to a bunch of the rates folks, and it seems like Scott Bessent, who I was a little bit kind of hesitant with the market buy it, continues to say, you know how he's focused on 10-year yields, right? He said, we want lower yields. That's where we're focused. We're not going to get in front of pushing the Fed around. Our policies, Doge, et cetera, are going to bring yields down. We're going to cut the deficit. I think for now, Tom, people are afraid to kind of fight Bessent, right? So they're feeling like the long end they're going to take care of. Issuance, he keeps saying, no more coupon bond increases for the foreseeable future. We're going to stay steady. They haven't increased them in a while. So I think the market has taken some solace in, but I think there's time, they're giving them some time. But if which is going to take till later this year, the budget goes through and they blow up the deficit, we're in trouble. Yeah.
Well, Liz McCormick with us. We're going to do an ample discussion here. Julie Norman on deck on Yemen as well. We welcome all of you on your commute across the nation. Good morning on Sirius XM channel 121. And that's the way Paul Sweeney rolls. Yeah. Futures green now up 8. There is an advance in the market here with the VIX under 21.76. I mean, it's killing me. On a St. Patrick's Day, Sweeney to McCormick.
Yes. Exactly. That works. So, Liz, what is the longer-term gain? When you talk to people in the bond market, what do they feel like the Trump administration's longer-term economic game is? Because we're getting the pain, certainly, near term.
Right. I think they think the longer-term game is it's going to be good, right? They're focused on reducing regulation, which is always good for bankers, the system, right? Again, like I was saying, they say they're focused on cutting the deficit. Scott Bessent has that 3-3-3 plan, which, part of that is bringing the deficit down to 3% GDP over the coming years. So I think the market is giving them time, but they're trading on the tariffs and the pain is going to cause, like even President Trump seems to say, I'm not exactly, but like if we have to have a recession, we will. It won't be too bad. So I think the bond market is trading on, in the long run, they'll probably do a good job. Maybe the economy does better. Maybe Doge and et cetera do some good things on the deficit. We're going to see how that goes. For now, it's going to hurt growth. We got to price that in. So, but I think everyone's talking about, even if yields go down, steepness in the curve. To your point, Tom, that until they really get to that debt and bring it down, it's a problem, right? It's like Chairman Powell says, we're on an unsustainable path as far as our fiscal situation. So Trump has put tariffs first, the tax cuts coming later. If the tax cuts end up, with all the different scoring, people like to use different ones. If it blows up the deficit, I think you're going to see the bond market react in a negative way. Higher yields in the long end.
Higher yield, price down, yield
up.
And particularly out to longer maturities. When you read Ira Jersey at Bloomberg Intelligence about the short-term space, that comes over to the thing I never talk about because I really don't care, which is a QT.
Oh, yeah.
And all that. And you're like, folks, if you don't know the act, Liz is like serious famous at this. It's Nora Rubini, QT1. I can't do the Rubini accent, but QT1, QT2. Where are we now, on QT12?
Yeah, I'm so glad you brought that up because I think, what people need to remember, and the market people, of course, are top of mind with this. But Wednesday, we're looking for maybe, and if you remember the minutes from the January meeting, they kind of said they discussed that they may at least pause QT, which is the slow roll off of the debt on their balance sheet, which has been going on in the background even as they ease rates. So I think that a lot of people are thinking either they announce it this meeting or they announce it next meeting. Because remember, another thing, you guys have talked about is the debt ceiling mess that, is looming, right? We still, they're using extraordinary measures to keep under the borrowing authority at Treasury Department now. So we need eventually either to resuspend the debt limit or to raise it. So that's, you know how we get to that X date? That we've got time. That's more like a summer thing. But I think the Fed, it kind of gums up, if we want to get wonky, the wheels of the Fed watching, the funding markets and our reserves at a level they're still comfortable with, ample enough. So they don't want to get into the muck of the debt ceiling messing up their readings, right? So they might just pause it, kind of put it aside for now. But that's an important point. I'm glad you brought that up.
Is this the first time you've been in the office in 8 months? I mean, come on. You are the queen. Come on, Lisa, let's pile on here. You are the queen of work from home.
Dad Capo's 91. I'm dating my age here. And Mom is 87. Wow. And I am the only daughter. So who do you think does most of the help?
But stop, folks. Worldwide, we're going to stop right now because what you heard, I mean, they dump on Joe and Mika. Okay, they're down in Florida with elderly parents.
I know.
I mean, this is the new reality, isn't it? Thank you for sharing that family.
No, honestly, it is.
reality.
And I will say Bloomberg has been more than great to me about that,
That's great. That's awesome. So, what's next for the bond market? What's the next thing the bond market's looking at?
Oh, well, we got to get through Wednesday.
Got to get through Wednesday, right?
Yeah, we got to get through Wednesday. I mean, like I heard someone, they're going on vacation. It should be a good week. It's boring FOMC. That always makes me nervous. You know, every time you think it's going to be a ho-hummer, something happens and blows it up. So I think there's going to be a lot of questions to Powell and the presser about, are you concerned about financial conditions with the stock market falling so much? And, like he has to kind of walk a tightrope of saying, of course we don't gauge the stock market, but we're watching. We're worried if there's a systemic risk, which there isn't. Credit spreads have widened, but not to an alarming level yet. But I think, there's several people saying he's got to at least show he's not obtuse to it, which some people felt like in I forget where he was, the last talk where he said the economy is fine.
Yeah, that worked out. Liz, seriously, Liz, thank you so much for being with us. Look for her journalism. That'll be out on Bloomberg here. There's a story coming out, which she got the story idea right here. We'll take it. I want a byline. Paul wants. Lisa wants a byline. Liz McCormick, thank you so much. Sometimes in the racket, you get lucky as well. I'm going to do a statement here of all the people helping us this morning. Bloomberg surveillance this morning, we're brought to you by IBKR. Will U.S. natural gas production, will it exceed 3.27 billion cubic feet in January? At IBKR Forecast Trader, the yes was recently at 9%. Check the data. Spot the trends. Start predicting today at ibkr.com/forecast. Sometimes you get lucky. You have somebody in because there's lots going on in whatever they do. And then something over the weekend happens. Julie Norman established, besides her fandom of the Baltimore Orioles, she established the academic study of terrorism, and particularly with an angle to the Middle East. And to have her on here after what we see in Yemen is truly a pleasure. From the University College London, Professor Norman, this morning. When we go in with jets, multi-million-dollar jets, and attack the Houthis, Julie, describe the landscape of Yemen and wherever the Houthis are.
Yeah, well, good morning, Tom. I'm not sure I've created the field of terrorism studies, but nice to be with you. So I would say, first I would say these are not the first strikes on Yemen that the U.S. has been taking. There were numerous strikes that were undertaken under the Biden administration when these Houthi strikes on ships in the Red Sea started over a year ago. So this has been ongoing. Yemen is a country that the government is divided. The Houthis control the capital of Sana'a and some of the northern areas. This is where most of the strikes took place. But again, I would say this is something that is happening in a wider regional moment as well. A lot of this is Trump trying to put pressure on Iran. I think this is really where these strikes over the weekend are coming from, and we can kind of expect some escalation from what we saw over the weekend.
Is it like ISIS, where we're going after leaders?
I would say it's a little bit different than ISIS. I mean, first, this group is just very different. They're a rebel movement. They emerged about 10 years ago. They, again, control different parts of the country. And when we're going after them now, it's mainly this, not for what they're doing internally, so much as their strikes on global shipping in the Red Sea, as well as U.S. military assets there as well. Some of the strikes are targeting military infrastructure, the abilities from the Houthis themselves. But over the weekend, they did start targeting leadership. And by targeting leadership, that also means you're often targeting residential areas. So we did see a much higher casualty rate over the weekend, estimates over 50, possibly as high as 100.
Julie, what do we know about the Trump administration's policy towards Iran? How do you think they're going to approach it?
Yeah, well, I mean, we've obviously heard the maximum pressure speak for a while, and I think we're starting to see what that looks like. You know, we've already seen much harder sanctions going on for Iran, which was expected. But moreover, we saw this letter sent by Trump to Iran last week, essentially saying, you need to negotiate and essentially give up the nuclear program or be prepared for military action to take it out. And we assume that would be, through U.S. and possibly with Israel as well, which has been threatened in the past. So this, I think, is ratcheting up now. And I think these strikes on the Houthis were part of the Trump administration's calculations for that. With that said, for me, the Houthis operate with a bit more autonomy from Iran than I think the administration is recognizing here, and I'm not sure how much Iran could rein them in, even if they wanted to.
Do they have defenses? I'm trying to frame out. I get the landscape. My amateur take is it's a lot of desert, a lot of poverty. You know, I don't want to be simplistic about it, but like when our jets go in, Paul, do they have anti-aircraft? I mean, is there risks here, Professor Norman?
So I would say there is some. I would say what the Houthis do best is they use a lot of drones. They use a lot of strikes of their own externally. They don't have a super sophisticated, missile defense system or something like that I think would put us at direct risk from some of these things, but they will retaliate, again, mostly where they can do it best, again, on that shipping that's coming through the waterways, where they essentially have a straight shot there. But in terms of overall military capacity, this is obviously something where there's a reason why the U.S. has so many assets in the region, is to try and push back at groups like this. But even with limited sophistication, they can still be incredibly disruptive.
Julie, tomorrow there's a scheduled call between President Trump and Mr. Putin. What do you expect to hear from that call?
Well, I would say I think we're all waiting to hear what is said. I mean, obviously, there's this discussion now of a 30-day ceasefire. Ukraine has agreed to it. Putin has not said no, but has certainly said there are going to be major conditions and things he wants to discuss. We heard from Trump's envoy over the weekend that they're moving closer to some kinds of agreement. But I think what's really going to be on the table is, what does Putin actually want, and how willing is Trump to essentially give it to him in order to get to some kind of, ceasefire, pause, truce, what have you.
Why should Putin agree with Trump? I don't get it.
Yeah, I mean, I would say I'm not sure that he will, and I think there's probably more of a gap between them than Trump maybe wants to realize right now. I mean, right now there is, again, this idea of re-engagement with the U.S., of reopening diplomatic channels, of easing some of the tensions that have obviously been in place for the last 4 years, and there's a lot of incentive for Russia to want that to happen.
Okay, Julie, we really don't care. I mean, the reason you're on is I'm filling out my bracket. I'm fed up with Paul Sweeney, Duke. I mean, I do have Duke, Alabama.
You do?
In the East as well. Julie, do you fill out a bracket at the University College London?
Oh yeah, I mean, I went to Duke, Tom, so
Yes.
I'm all ready for brackets, and so Duke goes all the way for me every year, even when they're not having a good year. But I'm definitely going #1 for Duke right now, and yeah, I'm super excited about the tournament. So I think you should listen to Paul these days.
There we go. Hey, Julie, you know, we're 2 months, a little bit more than 2 months into the President Trump administration here, and it seems to be, from a foreign policy perspective, a little bit of a kind of a go it alone type of thing, kind of disengaging to various degrees from our allies. As you sit back and look at this, how do you frame it out?
Yeah, well, Paul, I would say here over in London, people definitely aren't sitting back. They're sitting up, very rapt attention at how the U.S. is changing very quickly. You know, there's a real worry right now, not only for the U.S., you know, changing on some policy things, but really being, you know, potentially an unreliable actor, an unreliable ally, and in some ways even adversarial in many spheres. And I think the world is watching very closely to see, is this just a short-term run? Is this bluster, or is this a real change in how we do things?
What is the change, Professor Norman, of Trump foreign policy / military policy, first term and second term? What's the distinction there?
Yeah, so I would say first term, Trump overall was more isolationist, and we heard that, you know, language obviously in the campaign for the second term also. But with the second term, if anything, we've seen more of an interventionist foreign policy, not so much with military force, though I would say one reason that the attacks over the weekend stood out is it does indicate that the administration can and will use military force, but really much more of an expansion, you know, Panama, Greenland, Gaza, these areas that were not really talked about as focus areas, but the U.S. obviously has interest there, and Trump is going to push for them.
Julie Norman, thank you so much. Next time you're on, we'll frame out Orioles baseball as only you can do. Professor at the University College of London, greatly appreciated. Just brilliant there on Yemen. I think I know the difference between Yemen and Aden at the end of the Arabian Peninsula.
You do? Okay, yeah.
But that's about where you got me. Aden is actually much more of a buoyant economy. I know that.
Okay.
But it's good to speak to her about, to put some color, folks, into these news headlines that we see. Paul, I got green on the screen. I mean, I'm.
We'll take it.
Are we ready for a normal tape this week? The Fed decides 1:30 on Wednesday.
I know you guys are going to have that covered. The surveillance team, 1:30. The Fed decides on Fed Day. But I got red and green on the screen. I think people are still trying to gauge in what some of these policies coming out of Washington mean for the economy, economic growth, what it means for inflation. I hear a lot of uncertainty from portfolio managers, economists, and even when you hear companies speak on earnings calls or at various investor conferences, the most common word is uncertainty. I don't care what business you're in, and that cannot be good.
Have to see. Thank you so much out on YouTube. The live chat is just brilliant this morning. Some really important insights there, particularly on NATO and on Mr. Putin and all that. We'll have, of course, coverage. Balance of Power. We'll be doing that for you today and on through the week. And that's very, very helpful to try to synthesize. They get to the conversations away from the rote headlines as well. I want to go back to like the blue chipness of Mag 7.
Yeah.
How do you give guidance on a conference call?
Sure.
The third or fourth week of April? I don't get it.
No, what we hear from, a lot of these folks that get paid to think ahead, they're seeing a lot of uncertainty and they're afraid to go out on a limb. And who blames them? I mean, the University of Michigan survey, I'll point back to it on Friday when it came out, just a tremendous amount of uncertainty and higher inflation expectations.
May 2nd, Apple conference call.
Oh.
How do they do forward guidance? I just don't get it.
No, but they
like we've ever seen.
Yeah, exactly right. Because they have to do it on a global scale, and they have to gauge in what's happening in China as always, because they're the biggest. For most investors, Apple's kind of the play on China.
Let me look at the foreign exchange market right now. We do have dollar weakness. I got DXY, that benchmark from 107 through 654, 103.57. Weaker dollar. Certainly that's something the president likes to talk about. Yen at 148.84 doesn't participate today. Euro dollar back up. This is important. 1.09. 1.0900 on euro dollar as well. Euro yen shows euro strength versus yen. Sterling can't give me a 130. I got 129.70. Stronger pound sterling today. Renminbi comes in fractionally, not much going on there. But I would point Mexico's of interest, 19.91, stronger Mexican peso after the last couple days. We celebrate Ireland. Please stay with us.
You won't be denied. When the heart is where it's always been, my head is somewhere in between. Give me one more chance. Let me be a lover tonight. You're the real thing. You're the real thing. You're the real thing. Even better than the real thing.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Happy St. Patrick's Day to you. Sweeney House road trip, corned beef this afternoon as well. Did you eat the cabbage?
For the home people, but it's tough. It's not an actual
You showed
thing.
your mother to eat the cabbage
Yep.
and the rest went to the
Yep.
dog, right?
Yep. We might have a Guinness tonight.
Might have,
A little
we'll have
James
to see
as well.
I'm sorry. I'm a huge fan of the corned beef and cabbage thing. I just love it. Can we do a shout out, an important shout out? Neary's.
Yes.
East 57th Street.
Right.
And they finally, they had a run like no others. And it was such an honor to go there on St. Patrick's Day.
Yep.
With Jimmy and all. And I just give a major shout out, good morning, to an institution in New York. They had their run, and they shut down the last couple of years. I put it out on Twitter and LinkedIn as well. We say good morning to everyone in New York City that enjoyed all of the advantages of Neary's. Bloomberg surveillance this morning brought to you by IBKR. Will the U.S. Consumer Sentiment Index, will it exceed 70.3 in March of 2025? At IBKR Forecast Trader, the yes was recently at 29%. Check the data. Spot the trends. Start predicting today at ibkr.com/forecast. With our Bloomberg Business Flash, Lisa Mateo.
And we've got futures mix. This is after more economic data. We had February retail sales rose less than expected, up 0.2%. The prior month revised lower. But on the flip side, you have the control group, which feeds into GDP. Well, that increased higher than expected, up 1%. We also had manufacturing data. New York State manufacturing activity dropped in March, the lowest level since early 2024, falling nearly 26 points to -20. But meantime, a gauge of prices paid rose to 44.9. That was a 2-year high. Tomorrow, we have more data. We have housing starts, industrial production, the import price index. It all comes before Wednesday's Fed decision on interest rates. Now, a Bloomberg survey of economists says that the Fed's going to hold their interest rates steady through the first half of this year and then deliver a pair of rate cuts starting in December. We shall see. We have S&P futures, little change. Dow futures down 0.2%. NASDAQ futures up 0.1%. The 2-year yield 4.05%. That's up 3 basis points. And the yield on the 10-year 4.31%. That's little change. On the earnings front this week, we'll hear from the likes of FedEx, Nike, General Mills, as well as Lennar and Micron Technology. Finally, Tesla leading the losses among Mag 7 stocks. It's down about 1%, and NVIDIA up 1% ahead of its GPU technology conference. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate that. One of the things you get jaded on in this business is beauty lists. The beauty lists come out, and there's usually an angle. And I'll be honest, it usually has to do with raising revenue. And what was great about this weekend's Barron's, I'm sitting there, I got the mimosa going, the Chang mimosa. And I'm opening it up.
That's how we roll.
Ellen Zettner's getting a splash from Morgan Stanley. But they did their 100 women in finance, and it was actually adult. Like they had no ringers. It was like it was a power list. And so I'm looking around for strategists, and lo and behold, there's Lori Calvasina, who we welcome now with our RBC. How did you stumble upon that list? What did they see in your work? Did they actually read your reports?
I hope so. I hope so. No, to be honest, I have no idea who nominated me, but we're grateful for the honor. And you know, Tom, it's interesting. I've been doing this a long time, and you know, I had a birthday yesterday. I'm not going to tell you how old I am, but
29, looking solid.
29 over and over again. But you know, I'll tell you, I spent a lot of time early on in my career trying to do the job the way people told me it needed to be done, and to tell stories and have conviction and all these other things. And at some point I figured out that was not what worked for me, and I'm going to do the job the way it makes sense to me and the way I know how to do it. And I've been much happier since I made that conversion.
Yeah.
So maybe whoever nominated
Right.
me for this list, you know, wasn't looking at the young Lori, but is looking at the old Lori.
And your conviction is to pull back your Standard & Poor's call. Let's go through the process of that. Why did you cut your estimate?
So, you know, we've been running, you know, sort of a base case and a bear case since November. We thought it was going to be a highly unpredictable year. And I'll tell you honestly, Tom, what happened last week was my economics team updated their forecasts along with our rate strategist. And they made some big changes to the GDP and inflation views. And as I was reading their report, I said, you know, I think there's a lot of, we don't have to agree, by the way. We can all do whatever we want to do. But I thought that sort of the impact they showed to 1Q GDP and how that reverberated to the year. So they kind of had, you know, kind of a flattish quarter over quarter number in 1Q. And then they took their annual number from 2 down to 1.6. They made inflation stickier. They had yields moving down before moving back up at the end of the year. And I said, look, there's so much uncertainty out there right now. I'm not going to wait for this big moment of profound clarity. There are some things we can start to bake into our models now. So we flowed that through to the earnings, to the valuation model. Some other some other models, frankly, that were done on 12-month back test, I changed those to 9-month forward back tests, and the numbers changed a little bit. So we felt like it was time to put that out.
Primarily in an earnings-driven adjustment, a discount rate adjustment, or just, I'm going to use the word I've heard on all the conference calls and all the, you know, it's just uncertainty out there.
I think the idea of uncertainty taking a toll on the economy is what really showed up in the GDP forecast. And the GDP numbers flow through to my earnings model. So we pulled that from 271 down to 264. And also we have a GDP test in the targeting process. And we had actually said at the beginning of the year, where GDP ends up matters a great deal to this market. 2 to 3% GDP, historically a very strong range for the stock market. You're up about 10% on average. But if you look at a 1 to 2% number, and so remember Frances and her team went down to 1.6, so they're squarely in the middle of that range. That is typically an onerous environment for the stock market. We're down more often than up, and your average decline is about 3%. So moving from that 2 to 3 assumption to that 1 to 2 assumption was huge in the targeting.
I would editorialize, Paul, here that the tag team wrestling of Lori Calvasina and Frances Donald is to die for. Frances Donald is so damn good at GDP makeup that, frankly, Mr. Carney could call upon her for Frances Donald's candidate. I mean, Frances Donald can't be 100 finance women in America, right?
Well, she's Canadian.
It'd be on the Canadian,
it's a U.S. list.
Something like that. But trust me, if she was, she would have joined Lori on the list.
And Tom, the good thing about this list, many of the people on this list are regulars on Bloomberg surveillance. So we're making the right calls there, it seems like.
We're trying every day.
Trying.
It's like a real list. What can I say?
I know.
It's not like a bunch of ringers.
It's good stuff. Lori, so where do we go from here? You know, one could argue if the uncertainty is caused in part by the rhetoric associated with tariffs and changes in immigration policy and so on and so forth. I don't think that's going away anytime soon. So does that suggest that there's going to be a weight to this market for a while?
So look, I was talking to someone about this morning, and I got up early this morning. So I've had a bunch of conversations, but it feels like we're stuck in a moment we need to get out of. And I don't know if we're going to be able to get stuck out of that moment or not. But the longer we are stuck in this moment where it's just tariff, and uncertainty, the bigger toll that is going to take. You know, I do think as I've looked through a lot of the soft data, you know, we're consistently seeing softness on CapEx expectations and employment expectations, and they're not terrible yet, so you could shift them back in the other direction. But we are seeing evidence that this is having an impact.
A lengthy conversation, a value add for Global Wall Street. Lori Calvasina, Royal Bank of Canada, RBC, is with us right now in studio. We welcome all of you on your commutes across North America this morning. Good morning worldwide on Apple CarPlay, Android Auto, on YouTube, growing each and every day. Subscribe. Lisa Mateo demands that you subscribe to Bloomberg podcasts out on YouTube, growing each and every day. So if I have a more tepid economy, I'm seeing a distribution of where SPX is down, whatever, but the median or average stock, including the Lori Calvasina worlds, getting hammered as well. So if I say I want to buy quality, how does Lori Calvasina, I want to own or buy quality. How does Lori Calvasina define that?
I think quality is going to be done on a sector-by-sector basis within industries. If I look at the Russell 2000 right now, it's actually been acting a little bit better than I would have anticipated. That's something that's calming me down. But if you look at it within the factors within the Russell 2000, it is the higher quality factors that are starting to act a little bit better. You look at things like positive, negative earnings. You can look at analyst ratings,
Cash flows?
ROE. I tend not to do a lot of work on cash flows.
Because of CapEx variability.
Well, I mean, my clients do look at cash flows. I think that's a big part, especially of SMID investing. I'll tell you, it's a nightmare from a quantitative database perspective, so I don't tend to do a lot around it.
So where do we go from here? Do we think about just we had a person here just a couple of guests ago, a couple of segments ago, who's now in the hedge fund going to 30 to 40% cash. Is that what you're hearing from some of your clients these days?
So I have heard a little bit of that. I will tell you the conversation last week, and I was a little bit more in sort of the hedge fund derivatives world last week, and there was more of a sense of looking to buy the dip.
Okay.
And sort of not entire clarity as 10% is actually the bottom, or maybe we have a bit more to go. But there was sort of a constructive bias, and I think you see that reflected in some of the options markets indicators, right? The VIX has moved up to certain extremes we saw late last year, but things like the SDEX and the TDEX haven't really moved, so indicating concern, right, but lack of kind of true fear at this point.
What does multiples do? I mean, if a multiple's a ratio, and I got market cap, price, whatever, in the denominator, I got the Calvasina statistic. Do we get multiple compression where we enjoy a selected bear market?
You get multiple compression if you look at like a median S&P 500 PE, run that against the economic policy uncertainty index. You tend to get PE compression when the policy uncertainty moves up.
So then where do you hide?
So we've been telling
Besides Sweeney's 30% cash.
So I'll tell you, Tom, the sectors are a struggle right now. And interestingly, I think every sector except tech and discretionary is outperforming in the S&P 500 this year. So that's one bit of the strategy job that, that's been a bit easier for folks. But I don't love defensives in here. So we're underweight staples. We're neutral healthcare. We think there's policy risk on both of those. There's cheap and there's knee-jerk defensivism,
so
kind of
where's
going
the
in.
optimism? What are you long on?
I've been telling people to buy financials, and I know they're cyclical, and I know they get hammered when sentiment gets hammered. And so, we're not sitting here saying they're not going to underperform a bit more if we, have to get to a bottom in sentiment. But the UMich Consumer Sentiment Survey is getting so bad, it is actually close to recession-like levels right now. And if you go back to our financial conference a few weeks ago, the banks sounded pretty calm and confident. I think they're going to be able to manage through this pretty well. I think they sort of proved themselves post-SVB. So I think we're going through a sentiment shock that's going to have some reverberations unless we have a really nasty recession. I think the banks are okay. And I think, honestly, the sector was a little frothy before this all got started, and we've pulled that valuation froth out.
I know you did take down your S&P 500 earnings estimate. Do you think there's even more risk to earnings?
Yeah, and look, we took our number down a bit. I think we went to 264, and I apologize. First day new forecast. Sometimes, I get the numbers a little jumbled up. But, we took it down from 271 to 264, and we got there through updating the econ forecast. GDP take a huge bite out of that.
Okay.
The stickier inflation adds some back to the revenue line. But frankly, we also took our margin assumption down. I've been baking in some modest expansion this year. I just took it to flat. That's a guess, that's an assumption, but I've gone through so many earnings calls where, maybe there's one company that's, baked in a little bit of the China tariffs, but nothing on Mexico or Canada. And even some of the others have a lot of both and a lot of Mexico, and they haven't put any in. So we've got to go through the process of getting something in those numbers. I think it shows up in my number through Francis's GDP forecasts. But there's a lot of variability around it.
I strongly agree with that, whether nominal or real GDP. But what I find fascinating is the solution to this uncertainty for animals like you is you just bring in your x-axis. I mean, what's your new 3-year forecast? 4 months?
I actually never have a 3-year forecast. I mean, I always tell people
you're so young. I get it.
I'm not. Unfortunately, I'm not anymore.
We used to have like a 3-year forecast.
Well, look, and look. I think that the strategy community has undergone a bit of a shift. When I started in the business, I think it was reasonable to have a 12-year forecast that you didn't have to change, or a 12-month forecast you didn't have to change all that much. Things move too quickly now, and I've sort of tried to get the conversation started about, like, stop writing these shame on you articles in December about the strategists who moved their targets around a couple times. That worked if you were Byron Wien. That doesn't work in this day and age anymore.
And may we honor Byron Wien. He was such a support. But Lori, I mean, are you out the 4th of July with a Sweeney view?
Look, we will revise as we need to revise and as we get, new information that comes in. And we're very forthcoming about that in our product. Nothing is set in stone here.
Right.
What are your clients? What's the feeling you're getting from your clients, and how has it changed over the last, 4, 5, 6 weeks? Because we kind of came into this administration saying animal spirits going wild.
Yeah.
American exceptionalism.
Exactly right. And it was a real thing back in the day. But we are 180 degrees from that now, it seems like.
I think any consensus assumption, there's a Trump put, things are we're going to have this big unfreezing of activity. Every consensus assumption has been thrown out the window. I think Tom hit on something important, though, about American exceptionalism. In our weekly today, we had a couple charts buried in the back where we were able to look at European domiciled investors and what they're doing, and they're taking money out of the U.S. and putting it into Europe. In the U.S., it's kind of like more neutral-ish on the U.S., but the money is flowing into Europe. So I think that, regardless of whether we stabilize here in the U.S. and the U.S. can rebound, I think the door to Europe has been opened.
Lord Calvasina, thank you so much. Greatly appreciate it with RBC and, of course, our honor of being with Barron's 100 Women in Finance, along with a very good group, including Ellen Zentner. I noticed there as well, and others. Kyla Scanlon in there as well. Red and green on the screen right now. The VIX really in nicely. 21.87 on the VIX. Oil above 67, 67.80 on American West Texas Intermediate. Some dollar weakness this morning. Bitcoin flat, 84,000 after retail sales. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump says he will speak with Russian President Vladimir Putin tomorrow as efforts continue to end the war in Ukraine. Trump disclosed the upcoming conversation to reporters while flying from Florida to Washington on Air Force One on Sunday evening.
We'll be talking about land. It's a lot of land. It's a lot different than it was before the wars, And we'll be talking about land. We'll be talking about power plants.
The Kremlin confirmed Putin's participation this morning. The war in Ukraine began when Russia invaded 3 years ago. Iran-backed Houthi rebels in Yemen say they've launched a revenge strike after strikes on Houthi positions over the weekend, missing the U.S. destroyer Harry S. Truman. The Houthis said that they launched 18 missiles along with the drone. It appears at least all of those projectiles were either intercepted or at least didn't find a target. Intense U.S. airstrikes targeting Yemen's Houthi rebels over the weekend killed at least 53 people, including children, and wounded others. The Houthi rebels had targeted over 100 merchant vessels with missiles and drones, sinking 2 vessels and killing 4 sailors from November 2023 until January of this year. Foreboding predictions of dangerous weekend weather came true as a dynamic storm spawned tornadoes, dust storms, and wildfires that killed at least 39 people. Hundreds of homes and businesses were destroyed. In southern Mississippi, there are shaken tornado survivors and volunteers.
It sounds like 100 Amtrak trains going 100 miles an hour.
We're just out here trying to help people get trees off their houses and their campers and their cars and make sure ain't nobody hurt and get everybody out safe.
The weakening but still volatile weather system is moving east, with forecasters warning of dangerous winds from Florida to New Jersey today, while heavy rain hits New York and New England. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. You can win, and then you can win. Like 78 to 57, 79 to 63, 82 to 66. St. John's, I mean, for the first time, folks, for those of you across the nation, frankly, worldwide, Julie Norman in London, Kriti Gupta in London.
Yep.
I mean, the St. John's thing, Paul, this is like a new thing, isn't it?
What's really interesting, Tom, is New York City, the New York metro market is not a college sports market, unlike many parts of the country in the South and the Midwest and things like that, where they live for their college sports, which is great. Here we have so many pro teams that there's really no room for college sports to really get any bandwidth. Boy, a big exception, Michael Barr, is St. John's. They are just the front page of everything. They sell out the Garden. People are going nuts.
Now, I'd like to know something, and forgive me, St. John's, New York, right? So why are they playing in the West?
Well, that's the NCAA for you.
I don't know.
Yeah, but it's just been great for St. John's because, again, there's a generation that grew up with Big East basketball when that was it. That was the center of college basketball back in the 80s when you had Georgetown and Syracuse and St. John's and all those great Games in the Garden. And now, St. John's is back thanks to Coach Pitino.
What's the Pitino difference here? I mean, it's a bunch of young kids. They got to go against Kansas or Arkansas. I mean, they're going to beat Omaha. Okay, fine. Good morning, Omaha. Thank you for listening. But they're going to go then Kansas, Arkansas as well. What's the Patino difference in the crucible of the tournament?
I think he's a great coach. He's won everywhere he's been, Louisville, UK, all that kind of stuff. But it's just I think he's brought in people he thinks he can coach to play his brand of basketball. There's not a lot of nil money there. There's not. These are guys that I think I can coach to play the way I think the game should be played. And boy, he's been right. I'll tell you.
Come on. Ari from Kansas City emails in and says SJU has no national profile. I mean, do they?
Well, Pitino does. St. John's does not. But again,
so
that's okay.
Like
they have
Wolford?
the profile in New York. They don't need Indiana. They got New York. They're fine. Pitino's got a national profile.
Maryland's playing Grand Canyon.
Yes, I guess.
I mean, is SJU like Grand Canyon?
Exactly.
I'm asking.
I have no idea.
I'm having a lot of fun with this. I'm the dumbest guy in the room, let me tell you that right now. We'll have fun with it towards the bracket. Yeah, I've completed it, but I'll change it before we get to Thursday.
Yeah.
From New York, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this features report sponsored by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. All right, we've got futures this morning lower. This is after retail sales rose less than a forecast. Quick breakdown. 7 of the report's 13 categories posted decreases, notably motor vehicles, gasoline sales, electronics, apparel also lower. Spending at restaurants and bars declined by the most in a year, but the control group increased higher than expected. So let's get to S&P futures. Little change. We have Dow futures down about 0.1%, and NASDAQ futures, they are little changed. The 2-year yield, 4.03%, up 1 basis point. The yield on the 10-year, 4.29%, and that's down 2 basis points. The Bloomberg Dollar Spot Index down about 0.1%. And shares of Affirm Holdings are off about 7%. The reason why, CNBC reported that rival digital payments company Klarna set to become the exclusive provider of buy now, pay later loans for Walmart. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciated. Futures again go a little bit red, -5 here. To the market opening, we're going to go to that opening. But right now in fixed income with Principal Asset Management, Mike Goosey joins us this morning. What I love about your background is you had before you were in like strategy and managing things and all that, you actually had an adult job trying to make the actuarial assumption in the pension business. Are we at risk of losing the ability to make our actuarial assumption because of all this turmoil?
Well, good morning, and thanks for having me. It certainly does make it a bit more of a challenge today. The volatility creates uncertainty, and I think that's really good for fixed income, ultimately long term.
Because we go to the coupon if we're worried about making our assumption out 3 years or 30 years.
Correct. That's exactly right. So if you start to think about what is that actuarial discount rate, how do you actually create a portfolio that's going to behave like that actuarial discount rate? You need to, having higher interest rates, having more consistent long-term positive curve creates a better opportunity for you to match off on those risks.
So, Mike, the market's been dealing with over the last 4, 5, 6 weeks this heightened level of uncertainty as it relates to economic policy coming out of Washington. How have you seen it be reflected in your market, the fixed income market?
Yeah, I think you hear on every whether it's equities or commodities or fixed income, the uncertainty word keeps coming in and is focused of everybody. And it's real. The uncertainty about what does that mean for inflation, the uncertainty about what does that mean for the Fed funds rate, how does that affect long-term growth prospects? Because when you have uncertainty, particularly in a consumer-driven economy like the U.S., it really does feed through. It takes a couple months to occur, but it really does feed through where you do find yourself in a position where even if you're not actually experiencing labor loss or even if you're not experiencing decline in wages, that psychology, that impact will have an impact on those longer term growth data.
Where's the most advantageous maturity right now? If you and everyone else is telling me price down, yield up, farther out the yield curve, where's the most efficacious point of duration?
So in our mind, it's somewhere between the 5 and 7 year part of the curve.
The belly of the curve.
The belly of the curve. Yeah. We have the most slope, where you're going to be less sensitive to the risk of stagflation, which is something that we haven't talked about in decades. Yep. Where you're going to have the less of the risk of the Treasury starting to extend some of the maturities, which we think if we do get a drop in interest rates, we will start to see, and ultimately creating that opportunity for better carry and roll.
Get one more in here.
How much credit risk are you taking these days?
So we're actually pretty comfortable with credit. I'm not insensitive to the fact that there is some risks of, and you saw that with Kohl's and Target and some of the companies that have come out recently with some warnings. But ultimately, we've seen terming of debt over the last couple of years. They've put these companies in a pretty good fiscal position to be able to weather any kind of downturn. If we go into a recession, clearly we got some concerns.
Massive jargon there. What is terming of debt?
So going from rolling over shorter maturity debt, 0, 2 year to 5 year parts of the curve, and moving that out, which is something that happened over the last couple of years as interest rates were extremely low. You saw that many companies were issuing longer dated debt. The amount of 20+ maturity debt that was issued during 2021 through 2023 was the most that we had ever seen.
Interesting. Mike Kusi with us. So we're going to continue right now. Chief Investment Officer.
Fixed income business.
Global fixed income.
Interest rates go up, bond prices.
No, I learned the hard way to have a certain respect for
these guys get paid well
income.
for that. I don't get it. It's been a scam my entire career.
We'll have to see. We're going to come back if Mike. You're in quite a mood today.
Well, it's the Irish is up.
The Irish is up today.
Irish is up
I would
today.
say it's just like. Do you agree with me, Lisa? He's basically out of control. Paul Sweeney here on St. Patrick's Day to get you through the morning. Rumor is he'll still have his job at 10 a.m. with Alex. Is Alex in today?
I believe she is.
We are. That'll be very good. And we'll get you through to 12 noon this morning. Hopefully the rain letting up is a rumor that we have right now. Futures at -3, churning, I'm going to say, right around the zero level, 21.92 on the VIX. On a St. Patrick's Day, it is lovely to go to Lisa Mateo.
Yeah, and will we see green on this St. Patrick's Day as the markets get started? Well, it looks like that's not going to happen. We'll start with the S&P 500. Little change, down about 5 points at 5,632. We go to the Dow, down about 0.1%, 50 points, 41,433. And the NASDAQ, down 0.1%, 33 points at 17,721. The 2-year yield, 4.03%. That's up 1 basis point. The yield on the 10-year, 4.29%, and that's down 2 basis points. With the Bloomberg Dollar Spot Index down about 0.1%. Over to, I want to point out COMEX gold because it's at $2,996 an ounce. We go to oil, Brent crude $71 a barrel, WTI crude $67 a barrel, and Bitcoin right now down about 0.5% at just over 82,000. That is your Bloomberg opening bell report. Paul and Tom.
Thanks so much, Lisa. Appreciate it here. -62 on the Dow. right now. And we'll have to see. I mean, it's going to play out across headlines, frankly, as we can. Mike Gussy with us here with Principal Asset Management. I look at a corporate bond, and I just sort of like to see the weather vane, if you will. You mentioned credit earlier. Is that a comfortable place to be versus the media's focus on full faith in credit?
We think so. There certainly is going to be some wobbles. As you've seen, equity prices have been wobbling, and credit spreads are highly correlated with equity markets. But that longer term, that we feel like the quality, the fundamentals that we talked about earlier justify owning things, even lower quality assets. So we're comfortable with high yield, being opportunistic in the securitized credit space are areas where we think you're getting compensated and in total yield that's consistent with whether you're talking about pension plans or individual investors that can achieve your long-term objectives.
I'm looking, Paul, at an 8-year piece. I'm not going to mention a company. It doesn't matter. It's a boring, stodgy, packaged good company, 4.6% yield, sort of a vanilla corporate. And it's massively going back to 2023 in-betweeny right now.
Yeah.
It's just, right in that middle,
Yep.
that middle ground.
Exactly. Mike, what do you expect to hear from our Federal Reserve on Wednesday?
So, yeah, it is a big meeting because we do have new forecasts coming out,
Okay.
projections of what their expectations are for policy rate changes as well as growth and inflation. We don't think there'll be any change in policy rate that'll occur on Wednesday, but it will create an environment for us to have a good sense for how much are they trying to look through the uncertainty. How much, and I'm going to bring up a word that we haven't used in years, how much could this inflation be truly transitory?
Okay, oh boy.
And I hate using that word because it became a 4-letter word.
That worked out for Principal.
Yeah, exactly. But you wind up with this environment where you're going to learn about at least what they're thinking about. And so, we think that the economy is slowing, that you're starting to see some signs that the employment picture is deteriorating. And that ultimately is going to create this window for the Fed to move towards a neutral policy rate. Not necessarily to accommodate it, but towards neutral.
Green on the screen. It's a shift here. We'll see where we are in three in a cup of Sanka. Mike, if I look at Principal, part of the joy is listening to your institutional clients. What are they telling you?
So there is a demand for yield still. We've seen this for a number of years, and that continues to be the case, where investors are looking for high quality, looking for opportunity to make sure it's safe, secure, but ultimately achieving their yield objective, whether that's a pension plan or an individual investor who's trying to make sure they have enough income for retirement.
Is dividend growth a substitute for yield?
Well, if you look at the dividend yield, it's lower than what you can get in the fixed income market, so potentially not right now.
Mike, thank you so much. Mike Gussy with us, Chief Investment Officer, Global Fixed Income Principal, Asset Management this morning. It's a round number, the Dow up 100 points, red and green, and there's a lift to the market, 21.64 on the VIX. I would just suggest we're waiting for headlines, and of course, one of those headlines, let me get over here to be sure that I quote this carefully and correctly. Russia says Mr. Putin to talk to Mr. Trump as U.S. urges Ukraine truce. This is our Gregory Sullivan, expert on this. The lead is the Kremlin confirmed that Mr. Putin is due to speak to Mr. Trump on Tuesday amid a U.S. push for a ceasefire. Such a conversation is being prepared for Tuesday.
I always think talking is better than not talking. That's always been my
I'm in that camp. My amateur take on history, yes. I think, Paul, you're dead on that. On a St. Patrick's Day, green on the screen. We like to see that. With a VIX 21.67. On YouTube, humbled by the world attendance. Thank you so much. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got green on this green. This is after a mixed retail sales report. Traders were fearing a bigger pullback. The value of retail purchases, not adjusted for inflation, increased 0.2% in February, but the control group increased 1% last month. So we'll start with the S&P 500, up 0.4%, 23 points. The Nasdaq up 0.4%, 80 points, and the Dow up 0.3%, 155 points. The two-year yield, 4.04%. That's up 2 basis points, and the yield on the 10-year, 4.29%, and that's down 1 basis point. The Bloomberg Dollar Spot Index down about 0.1%. We have Bitcoin up nearly 0.5% at just over 83,000. Tesla leading the losses of the Mag 7 right now, the only of the Mag 7 in the red, down nearly 3%. Nvidia, the shares are up about 0.2%, and that's ahead of its tech conference this week. On the earnings front this week, where we're going to hear from the likes of FedEx, Nike, General Mills, as well as NAR and Micron Technology. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Good early morning, Phoenix, Arizona, the Lopes of Grand Canyon University.
Yes.
This is what it's about.
I
Come
know.
on. I don't want to, Duke,
No, forget it.
Duke of Earl, Duke. Forget it. Good morning to Grand Canyon University. This is a Christian university, Phoenix, Arizona. Women's basketball to Waco to take on Baylor.
Okay.
In the men's basketball, I don't have it in front of me, but they're participating as well. Maryland, thank you, Ari, for that. The Lopes, it's my new underdog team.
All right, good.
I may have to change my bracket.
Grand Canyon University.
Have to
You're
see
right.
on
Look at that.
Why green on the screen on St. Patrick's Day? Balchunas sounds like an Irish name. Why don't you bring
Yes,
him in?
Exactly. So Eric Balchunas joins us. He's that ETF guy that we love to talk to every week. Talk to us about Bitcoin ETF flows. I'm reading from somebody in BI that there's outflows. When did that happen?
Yeah, no, well, look, when you have a big category of ETFs, there were 120 billion, I think, when the downturn started. You're going to see flows at the edges, where, traders are doing certain things. Like there was a hedge fund basis trade where they would buy spot and short the futures to try to capture some premium there. And when the downturn happens, they'll do the reverse, right? So there's a little bit of that, maybe some people panicking, but 5-6 billion of the total is about 5-6% of the assets. So you could flip it and say 95% of the investors stuck, which I'd say is
That's
a win.
how ETF people do it. You guys are always half. I would say generally, you guys are glass half full.
I think so. Well,
Is it the flows
you
or
said the word green like 4 times today, and I will say there's just a lot of green. Very optimistic industry. Yes.
Yep. So where are you seeing the act? So when we have a market that has seen a 10% sell-off in the S&P 500, it's been a while since the markets had to digest that. How do you see the ETF market kind of behave in that type of environment?
So it's been very routine. If you look at the flows over the past month, I mean, number one, VU, 30 billion. So it's taken in more money than last year.
Explain that. That's 30 billion.
30 billion year to date into
what?
VU, which is the Vanguard S&P 500.
It's an index.
Yes.
Okay.
And then number 2 is SPY, which you all love and know, at 21 billion. So 51 billion between those two ETFs year to date, like clockwork. So, you look at the flows, we're looking at a very normal year where the flows are pretty much consistent with the record pace last year. So the only thing I'm seeing is there is a push into gold and a push into ultra short treasury, like cash-like ETFs.
Yeah, okay.
So there is some of that, but otherwise it's pretty business as usual.
We're going to stop here, folks. This is so important. We could go with Eric for 2 hours on this. We're making jokes here, folks. The Vanguard put. Frankly, to me, it's a bigger deal than the Bernanke put. What is the Vanguard put, and why does Lisa Mateo care?
Well, it's not as powerful as the Fed put or the Trump put, where one word can make the market just rally. But it's a base. It's a relentless bid. So Vanguard this year has taken in 1.5 billion in flows every day. Every day. Right? These investors are
Remember when Magellan was like that for a month? It was like, but explain. This is Larry McDonald, folks, has been really good at this.
So at some point, there's a bid. In other words, you may have algos and rage selling and some institutions selling, but that sort of retail bid from Vanguard is buying. So the sell-off has a buffer. Now, you can still have sell-offs, but the buffer is there. And I point that out because it has a bottom. Like there is some bid coming up from the bottom that's buying. And I just feel like that's worth pointing out because some of the headlines kind of flick to this idea that mom and pop are running for the hills could be further from the truth. And we also saw data that only 0.4% of people have touched their 401ks this year. 0.4.
Okay, but the gloom crew and the volatility crew and they make money by movement crew pushes against that 24/7. Have we seen this behavior before?
If you want to be controversial, next time you get one of those people on here, ask them if they've changed anything in their personal account. My bet is they're still buying and like clockwork buying in their Vanguard funds in their personal account. That's what's so interesting.
Okay, but if Sweeney says we're going to 30 VIX, if we get a 30 VIX, if we get legit catharsis, do we still put 1.5 billion every day into Vanguard?
Maybe that would suppress a little, right? In 2022, Vanguard took in flows, but it was down a little. Maybe it was more like 700 million a day, but they still took in cash. So there is a point where maybe there is some rebalancing, but I'm telling you, I know 2022 was a whole year of that. It was going to take months of this. And obviously Friday and today are really reminders of the people who just invested regardless that they were doing the right thing. Because the thing is, how many times have you seen like the opportunity cost of like going to cash too quickly in the past 15 years? So we always use a phrase of Pavlovian dogs too. Like when they see a dip, they buy it.
He played for the Philadelphia Flyers. Unbelievable what he did with Dave Schultz.
So how has the market changed? I don't know if you have this data, Eric, but is the retail investor a bigger part of this market today than it was 20 years ago, thanks to ETFs?
Yeah, because they just make it easier to get into the market.
Yep.
I think back in the day, you had to have a company with a 401k, right? So people, corporations invested, and it was good. DC plans made us all smart investors. So we ended up picking good funds, and that's where the ETF boom happened. We're all pretty smart here. Other countries, not so much. But the ETF is available on brokerage platforms.
Yep.
The mutual fund, you have to pay this large fee to get into it on those platforms. So all the brokerage platforms now go to free trading. So you fire up your Schwab account or whatever you use, and you basically type in a ticker, and you own anything in the click of a button for really cheap, and it's tax efficient. That really has expanded the base of retail investors, especially in the RIA space.
I mean, Larry McDonald, it was my essay of the year, I think 2 years ago, 3 years ago. He only writes an essay every 90 days. But Larry McDonald, with his great book, folks, I should mention, it's not as good as Balchunas' book, but hey. But Larry McDonald said, look, the immovable force is a wall of money. Eric Balchunas, describe your immovable force.
Yeah, I would call it the Vanguard bid. I also think that the reason it's immovable is people, especially older people with a lot of money, they dated active managers in the 80s and 90s, and they found some luck, and then the manager underperformed. When they finally found a Vanguard index fund or a BlackRock index fund, they were like, I'm done. I'm off the market. I'm getting married. And they're happily married. They feel like they have the best deal in their personal account. And there's just nothing that's going to get them to come out of that. Now, let's talk about maybe a 2000s where you have the markets flat over a decade. Anything's possible. But until we see, I'm talking a year, I just don't think the Vanguard put it's immovable at least for a year. Beyond that, we'll see. But that's why we're only in a couple months. That's why I really try to take the other direction here. And the thing is, SPY taking in money also shows the trading crowd buying the dip. So that's why, I haven't seen anything that ties with the headlines tightly yet. I think it's algos and rage selling.
Algos and rage. And I guess what I learned here today, Tom, is just that, and I've been in this market since '86. It's changed out there. I mean, the retail investor is such a bigger part of the story than, like, I grew up with just catering to the institutional investors. These retail people out there, thanks in large part to ETFs and zero and these trading platforms.
And the internet.
If
you look at the internet, and if you graph the internet users worldwide and passive assets, they're like 98% correlated.
Where's your next junket? We live vicariously through Eric Balchunas.
Vegas, baby. I'm going to Vegas. Yeah. I'm going on a little fishing trip in Florida, and then I go straight to Vegas for the exchange ETF event. It's the big ETF
these
event.
Events are never in Sheboygan. They're never in, like, they're Vegas.
They moved it. It used to be in Miami. They moved to Vegas.
Sweeney and I have no life.
No life.
You would be welcome with open arms there. You should come. You could get all kinds of guests there from all the big firms. You should come and broadcast from there. Right, Bob Pisani from CNBC goes there.
Mr. Pisani goes there?
All right,
for 10 years running.
All right, Eric.
Pisani goes. I got to talk to Sparta about this.
Yes, exactly.
Pisani goes there, and I don't.
Yeah.
Balchunas is holding court out there.
It's not too late.
At the Bellage.
You got 6-7 days.
Pisani has less gray hair than I have. That's all I know. Eric Balchunas, thank you so much. Just encyclopedic. And I learned a lot there on Vanguard as well. The Dow up 168 points. The VIX 21.20. On YouTube, subscribe to Bloomberg Podcasts.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. It is St. Patrick's Day. Tom Keene, but not K-E-A-N-E. Paul Sweeney and Michael McKee. It's very good.
Wow.
I mean, so my grandmother would sit on the couch, and after the third scotch announced we weren't Irish, and her daughter-in-law would step in, my mother, and say, "Excuse me, but Richard Keene came over on the boat from Dublin or wherever." But it's a good celebration. Partly with the Irish is you have a beverage of your choice before the meeting. Mike McKee with us now. Are they going to have a beverage of their choice before the Fed meeting to get through it?
I don't think there's enough Irish on the
It'll be Irish coffee. Yeah.
It shouldn't be too hard for them to get through it. They could probably skip the meeting and just vote by mail here, email. They're not going to move. Right now, the economy seems to be slowing, but not quickly enough to demand any kind of relief. We're looking at a PCE inflation number that is likely to go higher slightly. And so they might as well sit, since we have no idea what's going to happen. And, you know, in theory, April 2nd, we're going to find out more. Right? So 2 weeks after.
Yep, exactly. We had some retail sales data today. I'm not really sure how to read it, Mike. What did you take away?
It kind of is there was a headline, I don't remember which news service, that said retail sales did not collapse.
Okay.
And I think that sort of sums it up. The headline number was weak after a revised down week, January. A lot of that was gasoline and automobiles. And automobiles is a little weird because they sold more units. But most of the categories were pretty weak, including food and drinking places, despite Tom's best efforts. They were down 1.5%, which is it's the only services thing in the index, and it is also the only thing that is a really discretionary. So it wasn't a great number, but we did see a big increase in non-store retailers, e-commerce. Weather was bad. Flu was bad in February,
so Amazon
maybe people stayed home and just shopped by internet.
On radio and Good Morning YouTube, our global technical director has this beautiful Sheboygan, Wisconsin, the Malibu of the Midwest travel guide. Good morning to Moose Wallish and all from Sheboygan, Wisconsin.
You want to know
the Fed,
some trivia?
Yes, please.
I lived in Sheboygan, Wisconsin.
Did you?
When I was 5 years old.
Very cool.
It was a long time ago.
Does Jerome Powell care about Sheboygan, Wisconsin, or is he just focused on 3 zip codes in New York?
He cares about Sheboygan, Wisconsin. He cares about the rest of the country less than he cares about New York, in the sense that when you're using New York, I assume you're using it as a sort of a reference to the markets. And the Fed's view is they can't do anything about the markets, and markets go up and markets go down. But as long as they function, it's not the Fed's
but critical question here. Over the weekend, I saw a lot of secondary and tertiary labor series deteriorate. Are you seeing labor data deteriorate right now?
Not significantly. It's still holding in about where it was. Connor Sen has a column out today about Gen Z unemployment rising to 8.1%. But if you look back over the last 20, 25 years, it's averaged about 10%. And it goes up every time there's a recession. So maybe it's a sign of recession, but maybe not.
Have either of you been to Limerick?
Yes.
Ireland?
Yes, I was just there
What
in
was it
September.
like?
Oh, fantastic. Beautiful. I mean, it's just, I tell you, the western side of Ireland, those are hardy people because they get the weather right off the Atlantic Ocean.
11 months of the year.
Unbelievable. I mean,
take the travel photo
exactly.
in 1 week.
They're some hardy, but beautiful. Fantastic. So
When St. Patrick's Day, forget all this American stuff. Yeah, we did the obligatory U2. I mean, you got to do it. Dolores, the Cranberries.
Oh, yeah.
From Limerick. Good morning.